All right, y'all. Good morning. Got a lot of stuff we got to go through this morning. Ooh, the lag is crazy. Why is that lag so crazy? What the? Oh wait, hey, can you do me a favor real quick and let me know if you hear me? Damn, that lag was insane. Sorry about that. All right, so as always, right? Well, first off, I hope you guys have had a good start to your new year. Close this real quick. If y'all could do me a favor and let me know some of your goals that you've set, some difficulties you guys have had, some things you want to overcome this year, some things you're aiming for. I'd be grateful to know that. It'll also help me kind of frame some of the things that I'm going to tell you guys about this year. But what we're going to do today is vitally important. It's something we do continuously. Very repetitive process. Tony, I know you know. You've been here for a while. So you know the whole process in terms of narrative and bias. I got fired 2 weeks ago. I'm sorry to hear that, brother. Passed my eval. Okay. All right, so I do have some opinions on that. So we very often in the trading community, I mean, I myself am guilty of this too. We look at jobs, or even as an entrepreneur, we look at jobs as like horrible things that we're trying to replace. And although that is true, right, that's kind of the point in why a lot of us started to trade. I know that was my reason for trying to trade, aside from trying to have more time with my daughter. But we got to kind of change the way that we view jobs, at least in the near term. Because although the goal is to totally get rid of selling our time for money, we have to change the way we view this. Because if we don't have a job and we're not yet fully where we want to be with trading, whether that has to do with the account size that can reasonably justify full-time trading, or the skill set that we can depend on in terms of trading full-time, until those things are a little bit closer or more in reach, we got to look at jobs as an asset funding our overall goal, which is obviously to not have to trade our time for money. But if we do that too quickly, it adds an extra layer of pressure to us, which can unfortunately result in something that we don't want to have to endure. Because if we're fully depending on trading for an income, it's a totally different mindset. At least that's what I've learned. It's a completely different mindset and a complete different level of accountability that we have to hold ourselves accountable for than it would be if we had a job and other incomes of some kind to subsidize the goal we're trying to achieve as we're reaching for that goal. Does that make sense? I hope that makes sense. It's something that most people don't talk about because they're trying to sell shit to people. Oh, you gotta quit your job and let me sell you this dream. Although that is, one of the main things that we trade for is to try to turn that into a reality. We have to still consider the reality, right? Sometimes it takes a little time, and you got to realize the more pressure you put on yourself, the harder trading is going to be to get to that type of goal, because like full-time trading is a totally separate world, regardless of whether you're using a funded account or a personal account. It requires you to have like massive trust, obviously, in what you're doing. And if we still have the little issues where we're getting out of trades too early, or we're in a trade and we don't trust the trade, or maybe we don't trust ourselves risk-wise, like maybe we don't trust ourselves to not blow our account because we've had over trading as a problem. If over trading and over leveraging is still a problem, that's the first prerequisite to know that I'm not ready at all to try to do this full time at all in any capacity. Because if there's a risk of that, plus depending on trading for money, or if you have a kid or a family you're trying to take care of as well, plus putting that on top of things, plus trying to learn how to trade, plus trying to figure out what works for you. I mean, you could just imagine the overwhelming amount of stress that we put on ourselves. And a huge part of trading is stress management. And if we don't have ways to mitigate at least, majority of those issues, I mean, it's just asking for hardship. And I'm not saying this because of my own opinion, right? This is something that ICT teaches about. Like, he has like a crazy level of requirement to endorse somebody trading full time. You got to, have all the things that I just mentioned, organized plan, trust yourself in terms of self-control, have an organized, proven risk process that you've employed for at least 6 months. He says you got to have at least 50,000 in your account. I mean, you could do it with 25K, but at the same time, it's like, whatever your amount of money is that you make at a job, if that can't be faithfully replaced by trading income, at least for a year, 6 months minimum, preferably a year or more, with proven consistency, if those things are not in alignment, there's an issue. You're going to have much more issues. Those things are not in alignment. Yes, this is live. Can y'all see me okay? I just want to make sure. Can y'all hear me good? It's showing me some alerts here that there may be a problem. But yeah, this is live, 100%. Casablanca, we, starting today, we're going to do this every single week. I did this every week last year. but we're going to do this every week. This is just, part of what I present on YouTube, aside from live trading. These are very important because I go over lots of processes and different things like that to prepare you and put you in position to gain clarity, because that's key. That's the whole purpose for anyone coming to my channel, should be to gain clarity. And I know Tony knows that. Tony, I appreciate your loyalty, bro. You be showing up all the time. It's greatly appreciated. I hope you've been getting value from the things that we do here. But yeah, no worries, Casablanca. No worry, brother. But yeah, so, when it comes to framing out full-time trading, there's things that you got to be reasonable with yourself about, because although it looks all glitzy and glamoury and, like it's easy in some form or fashion for these so-called educators that don't know shit, okay, that lie about everything they do and fake everything. It's the realities of trading are totally different, and this isn't, I will not present myself in a way that's going to harm anyone listening to me. And that's what these people are doing, that sit here and provide all these false ideas, just so they can gain an image. I could be probably 10 times bigger than I am if I was over here trying to flash this and flash that and show what I'm capable of, with the stuff that I've been able to do with trading. But that attracts the wrong people. That's why I don't sell only specifically a signal service, because that's not going to teach you what you need to learn. Because what if someone's doing a signal service and that's how they're supposedly making money, which most don't when they follow signals, because there's rules that people disregard. There's their own incapacity to be able to control themselves. They hold trades too long. They don't understand the risk protocols because they're just wanting an entry, right? There's so many elements that people disregard when they're trying to follow signals. Like there's a huge disconnect, and that's why a majority of signal providers, like the reviews on them, people are failing, because the mentor may get into a trade and he may have taken profit at 5, 10, 20 points, but the student is pushing harder, and maybe they're not paying attention. Maybe they want to hold it longer because now they're starting to go against what the mentor or signal provider is saying, which most times happens because people are greedy and don't have self-control. It just causes a world of problems. I do give some signals in my private community. What's up, Maddie? Good morning, brother. One of my private community students. I hope you're having a good morning, brother. Thank you for hopping on, by the way. But yeah, you should be focused more on how to trade well, and keeping in mind some of the things I mentioned about live trading preparation. Like you got to be aware of the realities of things, and it's not what people want to hear. But again, I'm not going to be somebody that is going to sugarcoat just to sell you something. That's not the point in why I do any of this stuff. Because honestly, trading has changed my life entirely, and it's taken 5 years for me to be where I'm at. A lot of hardship, thousands and tens of thousands of dollars in losses, and education purchases, and buying things that were useless, listening to idiots online, driving their rented Lamborghinis and all this nonsense. And of course, ICT changed that entire thing for me. And, I've been blessed to be where I'm at. So obviously, that's why I come on and try to talk with you guys and anyone that, gives me that trust, because it's hard to come by in this industry. It's very difficult to find someone to trust, and majority of people, a rule of thumb, majority of these people pushing signal services for the most part are lying. And that's why you look at reviews and talk to people and they tell you, oh, it was a scam. Like, for example, Mamba FX. Okay. I joined his shit for 3 months and watched what he was doing. For the people that continuously pay for this guy or anybody else related is incredible. Because you could spend a week there and see, he'll send out a signal, he'll get out of the signal, and then 20, 30, sometimes an hour later, he says, oh, I was in profit. And the chart turned completely against him. I mean, for people not to be able to observe that is unreal. And it's, again, they got these blinders up because of the image that's sold. I don't know him personally. I'd imagine that, hopefully he's a good person, but it's hard to realize, and get the reality of people. I have trust that I can make 20% in a month, easy and consistent. Is it logical to you? By the way, this week I make 18%, but only in challenge account. Now I pass it and I will receive the live next week. Okay, so consider this, right? When it comes to funded accounts, but to answer your question before I move on to that conversation, when it comes to funded accounts, you don't really have the full amount that you think you have. It'll say 100K. You only have like 3 to 5K. So you're technically only trading a 3 to 5K account. So making 20% on a funded account is insane unless you have like 50 accounts that you're parlaying, which one of my good friends, Jake Cap, does, right? He has multiple accounts, but the risk on all of his accounts he uses, it's like less than 1%. But add all them together and then it creates a larger percentage. But when you're trading one funded account, you're over leveraging to the max because you technically only have a 5K account. That's a reality that people don't like to mess with because they want to live in this fantasy world and it hurts them. Whether they want to hear it or not, it absolutely hurts them. But when it comes to you asking is 18 to 20% a month logical, take this into consideration. If you know Warren Buffett, like if you've heard about all these big time billionaire traders, they make 20 or 15 to 25% a year. Okay, those are the pillars of, investing like mastery. And they're making 15 to 20% a year. So put that in a context when we're thinking about 18 to 20% a month. It's not impossible, but it's unreasonable. I know some traders that do that consistently. I'll be the first one to tell you that I don't do that consistently. And if I was, I'd have to have hundreds of thousands of dollars in my account. I'd have to be almost perfect, okay? And it's just not something that is reasonable for majority of professionals. So with that lens, we can't take that as reasonable for us, especially if we have like a year of experience, 6 months of experience. It's just totally unreasonable. And again, that's not good for someone trying to sell some shit. But honestly, that's I'm not here to do that. I'm here to get the reality out because I had to face that myself. And most people are getting hurt in this industry, and it breaks my heart to see what some people go through. Some people mortgage their homes. Some people spend their children's college fund. Some people spend their last dollar that they're gonna spend on their bills, and they go broke because of the wrong mindset. Some people off themselves, like take their own lives over this industry because of mindset, and it's horribly unfortunate. It really is. And if you set goals of like 18 to 20% per month, and you try to view that in a lens of reasonable, you're doing yourself a disservice. Because if you make 5 to 8% a month, that's totally amazing. And if you're not there yet, because your account size can't manage that yet, that's not something to attack yourself over or be in a rush to do. Because the faster you go, it's like, if the speed limit on the street says 20 miles an hour and you choose to go 100 miles an hour because you think it's going to get you there quicker, most times you're probably going to get in a wreck because traffic is, going slower. It's unreasonable to do that, which I imagine you guys agree with. So if you look at trading, if you want to be like a speed racer too quickly, too early, it's going to be an issue. You're going to get in a wreck. Or you may not get in a wreck yet, but you're asking for it in the future. And it's just not a professional way to view things, in terms of rules. Some of these professionals on Wall Street are pretty insane. But at the same time, they have the money to blow, and they have the mindset, they have the experience of decades, years. So they don't get flustered by one or two losses or a bad losing day because they over leveraged, and they know they can bounce back because of the trust they have in themselves. Where does that trust come from? It comes from them having a proven process, and it comes from their experience. Like me personally, I don't worry about taking losses. I don't worry about the next trade. I worry about a set of trades. That makes it so I move the goalpost in terms of what I'm worried about in the market from one trade and each daily interaction to, okay, what happened over a set of 10 trades? It minimizes the stress. And as a full-time trader, you need to learn these types of things. These are things that most people don't talk about because most people are not profitable. They're liars. They're selling nonsense. And if you study ICT concepts, you see where that mindset that I'm sharing is rooted in. It's rooted in someone that actually knows what they're talking about, regardless of the haters. Those haters most times don't even trade anyway. So I ask you because I have now planned to have 500K funded in 5 months, pass from 10K account. Okay. And buy 200K accounts. Pass it in 15 days. So what makes you say 15 days? What makes you think it's got to be so quickly? And another question I'd like to add to that is, how long have you been trading? Do you have trust in your abilities, right? And are you over leveraging to get to those goals in that 15 days, which I would assume you would be. Because again, like I said about the 18 to 20% a month, it's unreasonable if you're doing it on one account that you have max risk at 5-6K. I mean, to get that done in such a quick amount of time, that's a lot of money to make on the funded account with a small risk allocation and extreme rules, which is kind of the dynamic of their business plan is to strangle you with rules. Some are unreasonable. But then again, it kind of helps you in a way be more disciplined or build discipline. But yeah, how long have you been trading? Why does it have to be in 15 days? Why can't it be 2 months? I have 4 years. Okay. 4 years, I'm in a aha moment. Okay. I feel like I will change from always pass a challenge, and I don't do payouts like this last year. Okay. So 4 years, so you got your aha moment phase from what you're telling me. I feel like I will change from always passing a challenge, and I don't do payouts like last year. So you're saying that you passed the challenge, but you didn't get the payouts? Like you failed the challenges? It's kind of don't understand exactly what that last comment was. But nonetheless, right, when it comes to challenges, depending on the company you're using, I'd recommend that you go with companies that allow unlimited time. Because again, if you're in a rush, it's going to be a serious issue because you're going to rush, and it's just going to be too quick, especially if you're trying to make 18 to 20%. And, 4 years is a decent amount of time. Definitely, in my opinion, a good amount of time for you to have solidified a risk process and understand the risks. And if you have everything organized, it's doable. But again, there's an issue that I always have when people put like this quick time limit on things like challenges or anything else to make a large percentage. Because again, put it back in the lens of Warren Buffett and these big time pioneers in trading. They make 15 to 20% a year, and they do amazingly well. And the reason is because they have a large account that allows them to not risk a lot, which is the mindset you want to have. That's why having tiny accounts is very difficult, or trading one account that's a large funded account when the risk protocols are so tiny, when you're aiming for like a huge percentage, because you're forced to over leverage, and that's horrible practice because you're training bad habits, and it just long term it becomes an issue, and we want to deny those issues Because if you're full time and you have over trading, over leveraging, and and you're not organized, and you don't trust yourself, you don't trust your model, you don't have a process you've proven to yourself, it becomes a serious problem that you have to battle. And then if you add on real life issues like bills and all these other things, especially if you're only doing trading and you don't have like maybe a part-time job or something else that can take some of the stress off financially until you get to where you're trying to go, it's way harder. It is like super hard. Majority of people don't make it happen with those things laying on top of them. And I mean, that's probably easy to understand, right? Because last year I passed 8 challenges. So you passed 8 challenges and had one payout. Okay. Just a small payout, by the way. I don't risk more than 1%. I'm in 2% drawdown. Okay, so you got the regressive risk approach that ICT teaches. That's good. It's definitely good. Highly endorse that. Highly endorse that. Meaning you take a loss, you drop your risk by half until you make back the rest of the loss. But what I know is the big hedge funds can't trade like us. Yeah, they can't. Yeah. Yeah, exactly. And they layer their positions. They layer positions in because you can't put $2 billion in a 1 minute time frame. It doesn't work. Otherwise, the whole market it would go sporadic because it's just too much within that. And there's just not enough. There's no opposing view. There's no opposing side to the trade. There has to be a buyer and a seller at any given moment, at every level, for price to move. So it's like, if it can't find that or pair that transaction, pair liquidity, buyers and sellers, that's why they can't put one big massive trade because they can't pair the other side. So they have to layer it in, bit by bit. And then, of course, eventually within the weekly range, you see the weekly deliver, right? But yeah, I hope that some of this perspective kind of resonates with some of you guys, because this stuff is very important. It's the reality of trading, and most don't talk about it, again, because they're trying to sell you something. And it's heartbreaking, really, because I love this industry. I love the people I've met. I've met some amazing, incredible students, incredible people that have helped me along the way. And, there has to be more of that type of vibe, more of those types of people showcasing and being here for the trading community, because it's overwhelmingly saturated with idiots, okay? Literally idiots that just want to take you for everything because they want to fund their stupid rented lifestyle. I have just 20 years. Oh, so you have 20 years. Oh, you mean you're 20 years old? Man, it's pretty intense, the amount of young kids I've met. I started this when I was 26. I'm 30 now. And man, it's pretty incredible. I wish I was 18 or 20 years old to learn this, because man, you got your whole 30s. So that you got your whole 20s. So at the same, with that in mind as well, going back to what I was saying earlier, why has it got to be in 15 days? You have 10 years and you'll still be 30 years old by just slowly preparing and becoming amazing at what you're trying to learn. You got nothing but time. Even if you spent the rest of this decade trying to master the craft, you'd still be young. I don't feel old. I'm 30. I don't feel old at all. I feel like there's so much time left, and there is. That's the reality. We're so in a rush. A person that talks about this in a very good light is Gary Vee. I'm sure a lot of you guys have known who that guy is. He is amazing. His view on life, his philosophy on many things is truly inspiring. It's very helpful for people like us. Bro, we know your content is great, and if you sell, it's not bad. Yeah, the things that I put, the paywall that I have in front of certain things, is to make sure that people that come to me, for one, have the right mindset, are willing to invest in themselves, and they take this serious. I taught for free for so long, and I'm not like ICT. I don't like my time being wasted. I like putting things out that are appreciated, because I don't have to be on social media. I really don't. I'm here to help people, and there's too many people that take advantage of that. If you're trying to be on a one-on-one basis and pour in so much into people, and then a lot of times if things don't work for them because of their own personal issues, lacking self-control. They don't listen. They want to do it their own way, and they don't care what you say. They just want to figure out what you're saying so then they can do the opposite for some reason. It's frustrating, and I don't need that type of frustration. But I still want to help, obviously, in any capacity I can, and that's why I come on YouTube. And I'm grateful for the feedback that I've received for these types of calls. It really hurt because problems of family, trust, and what I do, just lose my friends, bad mindset. Yeah. ICT does say in terms of sharing things with specific people that work or people that just aren't interested or don't have knowledge of investing, it's best to try to, let people know vaguely what's going on if you must, but in reality, you might as well just keep it to yourself. That's another reason why I love doing what I do with this, like with my private community and then with like YouTube, because I get to talk to people like you guys. You guys understand. You guys get it. So talking about these things doesn't become a hazard to our mindset because we're talking to people that understand, that value these this information. So it's a lot less stressful, and it's very fulfilling, especially when you start seeing people take value and grow and improve as a result. Right. So, but yeah, so kind of a long little discussion. Hope you guys got some good perspective. But yeah, let's get into some of the contents that I wanted to get into in terms of what we're going to see, get through the process of bias and narrative. Again, this is something that I do regularly. I did it all year last year on YouTube. Every week on Sundays, we kind of do a prep call. That's what this is going to pretty much be as well. So obviously the first stage is you're starting from the economic calendar. And why? Well, something that most people probably don't know about the economic calendar is it kind of provides evidence depending on what the news event is, like if it's NFP or FOMC or interest rate analysis. Interest rate rate announcements. If it's things like that, a lot of times those volatility injections, which is what a lot of these news events are, a lot of times those specific days will not do what I'm about to tell you guys. So a lot of times when you look at the economic calendar, if it's regular news events, red and orange folders, those are most of the times going to be when you can potentially expect some low resistance runs to take place, right? Without a news event, you're inviting high resistance, right? Many people don't know that. ICT has said it a couple of times, but again, people are looking for entry. They're not focused on the actual details that get you to being a good trader. They're focused on things that they have a bias towards. Maybe they're focused on order blocks while he's teaching daily bias. They're only going to focus in on what he says about order blocks because that's familiar, versus having an open mind to the different tactics that make the order block effective, or and stuff like that, right? So this is a good thing to consider. That's why we look for specific news events. When it comes to these news events, unless it's CPI, unless it's FOMC, NFP, rate announcements, unless it's something related to those specific news events, a lot of times you could frame out potential low resistance liquidity because these are volatility injections, right? Low resistance conditions, right? It's not all the time. It's not a be-all, end-all. Obviously, you got to still layer some stuff we're going to discuss today. But it's just a good thing to consider when you're starting your week and looking at the economic calendar. All right. Sunday, Monday, obviously, are no trade days for us generally, especially when there's no news event. Again, that's inviting high resistance. It's inviting choppy, shitty market environments. So you're going to want to keep that in mind. And so, yeah, we have CPI. So we got to be careful. CPI is generally a one-sided event. It'll just race towards a particular direction, versus FOMC and NFP, which are two-stage. Generally, the first run is going to be fake. Then the second one, generally, the second jolt of liquidity is generally the actual move, which you can also kind of use a higher time frame to identify what could take place. But again, those are wild card days, so you want to keep that stuff in mind as well. Lower your risk and operate within the NFP CPI, FOMC, and rate announcement protocols, which, just drop your risk, drop your amount of trades, stop trading a day before the news event comes out, because it's just not worth sitting in gunfire that's literally engineered to screw you over. It doesn't mean there's no opportunities, but again, it's just, if you're learning, it's probably best to just observe and see how that goes. All right, so we have a couple news events. CPI, obviously, like I mentioned, is going to be something we want to be cautious about. PPI is sometimes volatile, so we're going to keep that in mind as well. Should be a good trading day potentially. Then, of course, Thursday, Friday, we're going to tread lightly because of what could potentially take place with CPI. All right, so go into this week with very soft expectations. So yeah, let's go to the bonds and yields now, which is the second phase. All right, so we're going to look at this. We see on the weekly time frame, we have this fair value gap here. All right, let me remove some of these drawings real quick. All right, so we have this weekly fair value gap we want to keep tabs on. Where's weekly? There it is. So yeah, we got this weekly fair value gap that we have pretty much blown past. So I will not go against price still going higher when it comes to this asset unless it was to break down below this weekly fair value gap. Otherwise, I'm going to keep looking for this to hold price, and my initial target will end up being this specific weekly high here. These are all weekly candles. So what does that make each high and low? It makes each high and low a weekly high and low. Why is that important? Because, it's one of the key liquidity pools that price likes to reach for. Weekly highs and lows, monthly highs and lows, daily highs and lows, session highs and lows. Those are all very easy, always occurring liquidity pools that we get to have at our disposal. It's something that I talk about all the time too. And if you go into the chart, don't make it complicated when it comes to draws on liquidity. Look at this weekly time frame and figure out where's the most recent weekly high and low, right? Like the previous week's high and low, and what is also in close proximity to that. That is your range for the week that's coming ahead. Those are your near-term liquidity pools, or at least weekly liquidity pools. Right? Very easy way to map out specific pools of liquidity, right? And in this case, right, we have the current or previous weekly high here. Right, then we've got the weekly low. So now we have our previous and current range of opportunity in terms of a weekly perspective. We have this particular fair value gap. You could also argue that this order block may be influential. We have kind of pushed through the midpoint of this. Right, so we'll see if it could stay above this weekly fair value gap. Maybe it runs back. If we have a bullish week next week, I wouldn't be surprised if the week opens, gives a wick, which will be the manipulation. If it stays inside this weekly fair value gap and starts having interest to go higher, before it was to get up to this high up here or this high, obviously, the first one, if the candle opens here, which it will for the start of the week, if we think of power 3 on the weekly time frame, if we think price is going to go up, it's very logical and reasonable for us to think the start of the week will decline in some capacity, digging back into this weekly fair value gap potentially. Maybe it doesn't even go deep. Maybe it just hits this and uses this as an inversion to then explode to the buy side. Now, if it was to break through this, right, this weekly fair value gap, respond from this midpoint of this weekly order block, and then get down below this volume imbalance, next target in that case for a contingency against the bullish bias potentially would be weekly lows here. We got equal lows. We have a fair value gap. We have a volume imbalance inside this, right? But until that's proven, I stick to what price is showing me. It's going higher right now. So there's no reason for me to try to go against that. Why go against what's being shown? You know, don't make this overly complicated. You know, it's already hard enough as a newer trader. There's no need to overcomplicate it and think, oh, well, there's a fair value gap down here. There's an order block in here, whatever the case may be. We're up here. The most near-term things to focus on is within the weekly high and the weekly low of the previous week. That's how you can start to narrow things down, right? So again, in that lens, we see that this is the close. So when the next candle opens, it's likely to retrace in some capacity if it's going to go higher, thinking power 3 for the weekly chart. And that may stall out here to then maybe use CPI, which is one of the news events coming this week, to then look to target this weekly high. If it is going to continue going higher, it's going to have to break this if it's going to continue to go higher, right? It doesn't have to, obviously. It's not like demanded. But if we're going to continue to trust the bullishness, that is the logical target that I'd like to see, right? If it opens up here and drops lower, doesn't really give any type of movement to the upside at all, and just starts to plummet into this range that we're watching here, then obviously you can also take this wick, break this down into quadrants, and you can get even more near-term targets as price makes its way to this weekly high up here. Okay, so that's another way that you can break down liquidity pools on your way to a higher time frame pool of liquidity like this weekly high up here. All right, so yeah, I hope that makes sense. Let me check the comments real quick. We're talking about, we know expansion always. This is consolidation, methods for expansion is target. Generally the high probability is take by side. All right, so yeah, again, I hope this all makes sense. These are kind of the things that I'm looking for. Just because I have this label down here, that was from a while ago, doesn't mean it's important. These lower levels only become important if price starts to punch lower. If it does want to punch lower and we get down below this weekly fair value gap, my eyes go directly to these equal lows here. If we make this bigger, here, let me make this larger. We could see those equal lows here. So my attention goes here only if we break through this weekly fair value gap. Because think about it, there's going to be a new weekly candle that forms once it opens up in a couple hours or so. So it's going to do something here, most likely not really much, because we have CPI coming and things could stall out until we get to that point of the week. And thinking of power 3, right? Consolidation, right? Accumulation, manipulation, distribution. Okay, in the beginning of the week is accumulation, manipulation. So if we were to open here and drop lower at the start of the week ahead of CPI, that is reasonable in terms of power 3. We haven't went to no other time frames and we're coming to this like this understanding, right? So we take this down to the lower time frames, it becomes even more helpful, right? But we see the bird's eye view here and understand that if we're going to have a bullish run, bullish power 3 potentially, we want to see price go against the buy here. So then it can give some type of positioning inside a logical higher time frame level in which we can use as a framework for the weekly range expansion if and when it happens, right? Because again, it does have the risk of this breaking through and retracing down to here, right? And then whatever it was to do down here, if it got down there, right, we'd have to adjust and navigate to that. But again, our trigger point is going to be this fair value gap here. If it breaks through that, I'm assuming that we may want to reach down into here. It may just break through that to reach into this level here and then respond, right? That is a risk if price does break down through this weekly fair value gap. But again, we're identifying important liquidity pools and we're determining when they become important, right? We're also determining, like I mentioned earlier, the most important liquidity pools based on us trading the weekly range. And in terms of what we see here, and just pretty much every single week, you want to keep this in mind, is the weekly high from the previous week and the weekly low. And anything in close proximity to that can also be used later as well. Now, compare that view and analysis to other people. right? They're over here thinking, oh, well, there's a fair value gap here, there's a fair value gap here, there's an order block over here, you know, whatever the case may be, just way away from price, and they get distracted. And that's very common in newer traders, obviously. But I hope this analysis here and the analysis we're going to continue to do helps you learn how to narrow and gain more clarity when you're doing these higher time frame analysis. All right, so now let's drop down to the daily chart just to get a little bit more context. All right, so you can already see price has made a response within this weekly fair value gap I pointed out. So it's already being utilized in some capacity. So we have a swing low here. Once the new week opens, it's going to be a actual swing low. So, you know, that may be important, right? If it was to shatter this, break through this fair value gap, and then break through this volume imbalance here, which is also a new week opening gap. If you didn't have any stuff on there, it just looks like a volume imbalance. That volume imbalance is obviously a new week opening gap as well from last week, right? But if it was to break through the weekly fair value gap, break through this swing low here, break through this fair value gap, and then violate this volume imbalance, that starts to put more context into the idea I was talking about here in terms of these equal lows being significant if it was to break through this volume imbalance and below this weekly fair value gap specifically. Because once we break through this weekly fair value gap, when we look at it from the daily chart, how many PD arrays get violated if this weekly level is violated? Well, there's 1, 2, 3. And there's also a response from this red line here, which again was the weekly order block midpoint. So that would show a valid response mixed with a daily time frame shift and multiple PD arrays, in this case 3 PD arrays, being violated to justify that if we broke through this weekly fair value gap, that would give me interest to seek deeper liquidity down here. It'd be more meaningful, right? And it helps you adjust instead of forcing buys because, you know, you don't have this under like this type of stuff in your mind. If it was to break down and get up into this level, right? So again, I hope that makes sense. So yeah, my line in the sand is this weekly fair value gap. If we're bullish and we're gonna get up here in a meaningful capacity, I want to see it stay above this, right? It may look to challenge it down here a little bit. You could then make an argument about the midpoint of this wick, right? Maybe it digs down to that portion in line with it digging down into this fair value gap real fast just to do a manipulation to a bullish power 3. That's reasonable. But again, if it was to just slam lower and start breaking through these levels, we have our 3 PDA rule, which I just mentioned. We have our higher time frame level that should hold if it's going to continue in this direction. But if all that stuff is disrespected, then obviously we turn our attention to something different. And that something different being the equal lows here, which is also a fair value gap on the weekly time frame, because our bias comes from the weekly and daily time frames, even as a day trader, right? So if those were violated, that's how we would adjust, and that's our validation point. Line in the sand is here. I drew a line in the sand last week on my Instagram about where sells would be not interesting in the indices. And if you go back and look at some of the content I put on my Instagram about that, you can see the logic here is being repeated, right? It's very systematic, repeatable process for validation, invalidation, and then higher time frame levels influencing the lower time frames. I did some content about that you can go check out. All right, so again, I hope this makes sense. If you have questions, let me know in the chat. But otherwise, we will now go from the yields, which dictate the DXY generally, or influences the DXY. That's the analysis that we just did for this asset. So now we're going to move on to something that influences other assets, like the indices, right? Or foreign currencies, for example. All right, so let me kind of clean this up real fast. What about DXY? So yeah, we're gonna talk about DXY in a minute. I'm just going through the risk on, risk off, full market analysis, essentially. Right. So the yields, the thing that we just discussed here, influences the DXY. So if this is going to go higher, we may see the DXY continue to go higher. Does that make sense? So all the analysis we did here is kind of justifying when we go to the DXY, if we see DXY ready to go higher, instead of just looking at the DXY, assuming that it's going to be going higher, we now have back-end information on an asset that influences DXY's movements heavily, like unbelievably influential, right? The yields dictate or influence the DXY. And so all this analysis is pertaining to what DXY could potentially do when we get there. And then obviously the bonds, okay, or T-notes, generally influence where the indices will go. As you can see, the bonds have been tanking. I've been talking about this in my private community. We've been ahead of a lot of the movements recently. Like all year last year, we were pretty much on the right side continuously, and even on YouTube when I was calling things out. And part of that accuracy and effectiveness comes from this type of analysis. And I do this every single week. I do it over and over and over because I'm telling you, this is super, extremely important. And once you study it, like many students have told me, they see it. And once you see it, this is part of building trust, is understanding what influences the assets you analyze. You know, the more context you can have versus, you know, just having PD arrays and higher highs, higher lows, the more context you have, the more justifying factors you have behind a particular assumption of a bias, the better. The stronger your trust will be. And then eventually long term, when you do go full time, like we were talking about earlier, you have a layer of trust to believe in when it comes to your decisions you make in the marketplace, right? Not financial advice, but, you know, it is what it is, right? So yeah, with this going lower, when we go to the indices, you'll see that this has been dictating what the indices have been doing. We called the turning point in the indices as well a week in advance, right? I talked about that on YouTube, I believe, but it was a constant everyday conversation when we were in my private community and we were in front of the drop that took place off the heels of the big time explosion to the buy side because of Trump's victory. But yeah, so with this still continuing to go lower, I mean, we could see how the fair value gap here has been beautifully met, right? I had that labeled ahead of time in my private community. So, you know, we've been calling it to go lower. We saw this fair value gap. We were calling it to go lower into this fair value gap, and it was justified all along the way. And this dropping, if you go to the indices, when we do go there, you're going to see how impactful it's been. Even when we go to the DXY, DXY has been going higher. What did we just get done talking about? How the yields are going higher. How the yields dictate where the DXY goes because it's the driving factor behind a currency price. So with this going higher, this is what we use to justify the DXY going higher. Right? And with this dropping and influencing the indices and foreign currencies, that's going to impact the foreign currencies going lower as well, on top of the indices dropping as well. Right? So just that quick little flash back and forth, you could see why the analysis on this particular asset class is so important and why I talk about it in literally every single video that I do when it comes to forecasting, because it's just fascinating. It is so effective and it helps you build that trust, right? Like I was talking about earlier, you got to have that trust. Yes, important to me to do this, be trusting in the market, trust system every Sunday. I do back testing for 1 week. Yeah, the more that you back test and see things, the better, you know. And of course, having the right information, getting around the right people that actually know what they're talking about, and then prove that they know what they're talking about. Not to toot my own horn, but I do this continuously, all the time, and it's proven effective all the time. It's not perfect, obviously. There's times when price doesn't want to do anything, but again, at the same time, it's undeniable with this type of stuff. Yeah, 100%. Mr. Donald, he is going to make the markets go insane in a positive way, at least for America. So expect crazy volatility. All right. But yeah, so coming back to the bonds here, like I mentioned, we've been calling for this to go lower. It's been pretty fascinating to watch. It's been very, very effective. And, although the indices have been a little sloppy because the year just started, we kind of been overlapping candles on the weekly chart, which is something we're going to talk about in a minute. Overall, it's been gravitating towards the influence that the bonds and yields have, which is pretty much the yields going higher, pushing DXY higher, and then the bonds going lower, pushing the indices and foreign currencies lower. And as you just saw, right, it's been very, very dramatic, right? Excuse me. But yeah, so again, similar to what we're talking about with the yields, looking at this, we're going to open up here. We're going to see how price, it's not a daily fair value gap. It's a weekly fair value gap. I appreciate you guys for sticking around. I know it's kind of been a longer session today. Had some stuff we were talking about, but I appreciate your guys' time. Hope you get value and go into the week prepared, because that's the goal, obviously, right? So when price opens up here, similar to the yields, right? We were talking about how the yields are going to open and possibly manipulate against this up movement. It may pull down into this weekly fair value gap. Similar thing is going to be, it's going to be a similar thing when we look at this market as well. These are opposing, they have opposing correlation. If this is going lower, we want to see the yields going higher, right? And then vice versa. So when this opens up, it wouldn't be unreasonable to see this pull back here, go up a little bit, maybe dig a little deeper into this weekly fair value gap, and then obviously try to maybe deliver from below the midpoint here. Wouldn't be surprised if that's what takes place. Thinking of power 3, right? If we're going to attack the sell side here, we also have a target inside this, all right? So we got a weekly volume imbalance. So that is potentially a target. And then again, each candle, if we're on this weekly chart, that has a weekly high and a weekly low, right? Each candle is a weekly candle. So that means each candle has a weekly high and a weekly low, right? So that's important, because when we're going into a new week, if we trade the weekly range, which I'm assuming many of you guys try to do, or even if you just day trade, where are the most important pools of liquidity? The first step to make things as simple as possible is looking at the current and previous, in this case previous, weekly high and then the weekly low. Because any of these further targets, whether it's the monthly sell side liquidity down here, which I have labeled, or this volume imbalance, before it gets there, it has to break through this previous candle's low, because that is the previous weekly low. That's the most near-term liquidity when we're looking at this time frame. All right? It's a very, very important thing. Many people, again, try to overcomplicate liquidity targeting, and it doesn't have to be complicated. A quick rule of thumb, right? Let's mention this real fast, because you guys have stuck around so long. Previous week's highs and lows, previous days highs and lows, previous session highs and lows, regular trading hours gaps, new week opening gaps. If you just take that list of liquidity and go into the chart and watch those levels, you would be shocked at how much simpler targeting becomes. Instead of just using Fibonacci extensions, you have ways to narrow things down with liquidity. You have ways to narrow down pools of liquidity that may get targeted within a daily power 3 or a weekly power 3, right? Some of them can be used to position, like this weekly high, hypothetically, right? If we opened up, or let's use the low. Maybe it opens up, purges out this low here, and then totally reverses. Well, that would make the weekly low the pool of liquidity that positions smart money with an opposing pool of liquidity to then pull price against those traders that are down below this low. or vice versa, right? If we were up here a little bit, maybe it wants, look what it did here, right? Price opened up for 2 weeks ago. Price literally ran higher, purged out the high here, hit a weekly fair value gap, obviously in conjunction, but then pulled off of that in a downtrend. So it used this level here to position the opposing liquidity to then turn price around. It also hit this weekly fair value gap also in conjunction. When you have a pool of liquidity that's mixed with a higher time frame PD array that could be logically used to go in the direction of the higher time frame as an opposing position for smart money, that is one of the highest forms of the draw on liquidity. If there's a liquidity pool layered with a higher time frame PD array, it is a fascinating study to dig into, right? It's extremely valuable. And like, say there was a fair value gap down below this low, right? And there's a low here and price is bearish. That makes the argument for price to want to attack that level much greater, much more likely to take place. You know, again, nothing is perfect, but these are rules of thumb that are extremely helpful when it comes to navigation and targeting and positioning and framework and, you know, being able to view pairing of orders, meaning smart money pairs buy stops with their sell positions, right? Or does a stop run above a high to then turn around and go lower, right? That's what they do continuously. And if you take that view and put it into like a higher time frame, and then you frame your narrative off of that, or have that as a piece of your framework, I mean, it's a fascinating thing to get used to. It's very, very effective because the best delivery and price comes almost always after a run on stops in some capacity. If we're bearish, buy stops being taken first before a big move happens is generally what takes place, especially when you compare that type of logic with a PD array like this one, right? A weekly fair value gap, right? So again, I'm expecting price to open, possibly pull back a little bit. I want to see us similar to what the yields are doing, right? I want to see us respect this fair value gap here and go higher for the yields. And then I'm going to use that same idea, keeping in mind power 3. I want to see price punch up in here a little bit, give us a little bit of a retracement, you know, just to dig a little bit deeper into those that are in profit. And then I want to see price really, really ramp up and slide. But again, if it breaks outside of this weekly fair value gap here, it may turn it to an inversion and we may look to target this area up here a bit, right? Again, we don't force that. We keep that in mind and continue to trust that things are going to go lower because that's what price has been showing. Bearish PD arrays have been holding in price. It is pretty extended. We do run the risk of price wanting to go a little deeper, right? It may, you know, that is a risk. But again, we don't change our assumption on narrative unless there's something important that takes place, like a shift in market structure, right? Or PD arrays now getting violated that should have held in this particular direction, right? Like in this case, this weekly fair value gap should be able to deliver price to this low here. It may take another week or so. Maybe it takes 2 or 3 weeks to do that because this is a weekly chart, right? But these are just some things you want to keep in mind as we walk forward, okay? And going into this new week, we want to keep in mind power 3, and we want to try to assume that there's going to be evidence that, you know, price is going to pull back, respect this weekly fair value gap as an inversion, preferably stay below the weekly midpoint here, and then drop lower. If it proves that that's the case, what's our first target? If we're just looking at this weekly chart, this low from the previous week. If our drawn liquidity is here, right, there's a low here that could be targeted because that's a weekly low as well. There's this volume imbalance like I mentioned. And then there's this larger low. There's also this wick, right? You break that down into quadrants, you have even more targets to the downside, right? So you can kind of see how there's little drag and drop views to like guaranteed liquidity that's in the market, which was from the list I just mentioned. And then obviously the most recent, most near-term PD arrays that we're inside of, right? The wicks, breaking those down, right? You can get more targets. And we're worried about the things that are in close proximity to us. First and foremost, the previous week's high and previous week's low, because we're trading the weekly range expansion, right? So yeah, again, I hope that makes sense. If you guys got questions, let me know as we go. But yeah, that's my assumption for the bonds and yields. And now with that background information, we're now going to move on to the DXY. So again, if we consider that the yields have an interest to potentially continue going higher, we're going to assume that that's going to be presented as well in the DXY. Because why? Why is that something that we'd have to keep in mind? Versus just looking at the DXY and just focusing there because that's what we're going to, base our indices off of. Well, there's things that dictate where the DXY is going to go, and you want to be accurate and you want to be able to trust a particular move, right? A particular narrative, right? That comes from the background knowledge that we've just discussed. And that's why we did all that first, and then now we're on the DXY. We don't just jump to the DXY or jump to the indices, because there's other things that we have to pay attention to, right? So with that being the case, right, with us having that background information, we now look at the DXY here. We can see what has taken place here, right? Price has pulled all the way up to this week. I called this weekly fair value gap as a draw on liquidity, and my private community students would come out and tell you guys that I'm lying. I've called this for like literally weeks, at least 3 weeks. We've been calling for this, right? Or maybe longer. We were calling it down here, right? This fair value gap was called out to hold and go higher. If it held, we would have continued to press higher. If it would have been violated, we would have then looked to maybe seek this low, the wick down here, so on and so forth. But it didn't do that, right? It respected this fair value gap, and then it delivered up to this weekly fair value gap. So our bias for weeks has been bullish in the DXY. And because that was the case, even when the indices were going against that bias, that overall higher time frame narrative, we knew that something like this was coming. And then we had an SMT between the three indices, and then that justified when this shift in market structure took place that we were going to now continue to drop. Again, I kind of showcased some of the school of thought in our analysis to see price go lower on my Instagram. If you wanted to go check out that and some of the information related to that idea, right? But yeah, so with what we see currently here, we see that bullish PD arrays are holding price, right? We see that this weekly fair value gap midpoint has been completely violated, right? The midpoint. So it's looking like it wants to fill the rest of this fair value gap. The next week, given the fact that the yields may continue to go higher, I'm assuming that the draw on liquidity, obviously from what we just talked about, is going to be the weekly high. And we also have to jot down the weekly low just in case. But I'm assuming that the weekly high from the previous week is probably going to be violated on its way to filling in the rest of this fair value gap. Now, what happens outside of that obviously remains to be seen. We don't look that far ahead because it's no need. We're trading this week, and that may take, maybe another week or so to get to. It may be the draw for the whole week. This candle, if we just fit that in to the next week, right? If we just like measure that and put it over here, I mean, it's reasonable for the next week to just do something like that and then just fizzle out and pause, right? Or maybe even respond and try to dig lower. But I'm assuming that that is going to be targeted, this weekly high here. Let me just post that real quick for completeness sake. All right. So we got this previous week's high in our crosshairs. When price opens up, again, I'm assuming that we're probably going to retrace a little bit. In this case, right, it's a little different scenario here, which I want you guys to take note of. We have this big wick here. All right, so there's buy side and sell side offered here. But aside from that, because this wick is, fairly large, something we can do to continue to gauge, how strong this is potentially going to be, right? we can measure out the wick there and note the midpoint of that wick. Okay. Noting the midpoint of that wick is going to be it's going to be pretty important, because if it's going to be bullish like it's been showing and the yields remain strong, this will probably be the line in the sand for price's retracement, right? We may see price open here in terms of power 3, give us a wick lower. Maybe it fills in the whole wick, maybe it doesn't, right? Or reaches into the whole wick, or maybe it doesn't. But I'm assuming that if we are going to be in a fast-paced environment next week, which, you know, may be kind of skewed because of CPI or whatever, but if we're looking at a way to gauge where the retracement could potentially take place, given what we're looking at here, we have the midpoint of this fair value gap here that is, you know, potentially going to act like a brick wall as well. But then we also have that midpoint here, like I mentioned. So when price opens up and drops lower, I would like to see this midpoint respected and then give us a response off that. Again, it doesn't have to do that only. I wouldn't even be surprised if it was to retrace a little bit deeper into this wick, right? So we'll see what the idea is. But again, if the yields are going to race towards buy side, like we talked about a minute ago, I'm assuming that this wick here, the midpoint, will probably be influential on our way to filling in the rest of this weekly fair value gap. Because right now you got to think, right? We filled in most of the fair value gap, but we still have this amount here that has not been fully delivered, right? And it seems, from what I'm looking at here, from what we all have access to see, it seems that they are looking to fill in the rest of this imbalance, because it's imbalance, right? It's, you know, it's inefficient. So they're going to probably look to fill in the rest of that, right? So we're going to observe. I mean, CPI may be used, right? We may open up Sunday, Monday, dig a little bit into this wick here, maybe even dig down into here, but then CPI may explode and be the move that is used, or that day, including that move, is maybe used to then fill in the rest of this fair value gap. And then once we get up into there, we're going to have to see what takes place, because it could very easily turn around, especially because it's been so aggressive. But again, we're going to gauge that as we go. We don't jump too far ahead and think, oh, it's going to go here, then it's going to go here. Then it's, you know, we're gauging what's going to be important for next week, right? What is going to happen next week? Because we break things down week to week. Okay, we don't break things down month to month, right? I mean, you can do that if you look at the monthly chart, apply all the stuff we've talked about, but just include the monthly chart. You can get an even larger view. You could even do this for a quarterly time frame, 3 months, and get a feel for what the quarter could potentially do based on the information on the quarterly time frame, aka the 3-month time frame, which I also sometimes look at as well. Right? That's the 3-month time frame. Right? But keeping things in focus, right? Again, that this here is potentially what I'm looking to see attacked. I want to see us possibly, if we're going to be quick, right? It's going to be a quick week, and it's going to fully continue with this bullish engagement like this, and the yields are going to go fast to the buy side, and the bonds are going to continue to potentially drop lower. I'm assuming this will get here pretty quickly, and I'm assuming that, or I'd like to see this wick hold in price, and then of course, you know, we don't want to disregard this aspect of things, the full-on weekly fair value gap level. Here, let me make this darker. Right? So yeah, we could see this in context, right? So again, I hope this makes sense to you guys. The first target I'm looking for, if I'm viewing the weekly narrative, because that's where narrative comes into play, right? You got to get an idea of what the higher time frame's doing, and then you take those understandings to the lower time frames, and then you're able to navigate more effectively and build more trust. And then of course we have the back end fundamental different analysis when it comes to the intermarket relationships. The overall process we're doing here is called risk on, risk off analysis. It's overall market sentiment we're gauging here, so then we can use that when we go into things like the DXY and we go into the indices. You know, people look at this and they'll say, oh, it's too much work. Well, guess what? It's also too much work to be violated all the time trying to reach our goals. You know, that you want to be as prepared as possible, and this is part of that process, which is why I spend so much time on this, both in my private community and then also here on YouTube with you guys. Again, I appreciate you guys that have stuck with me this long. It shows that you truly want to learn, and I'm grateful for your time. And I hope you're getting value. Oh, and if you haven't liked the video, definitely like the video and share with your friends if you find that reasonable. I much appreciate that. But yeah, so I hope this makes sense. This is essentially my view on what I want to see price do from a large context. Okay, and you notice how I haven't went to the 1 minute, I haven't went to the 1 hour, I haven't went to any of these time frames because those are irrelevant to me right now. Right? We could consider Friday's high and low as well as another opposing pool of liquidity. That's something I did fail to mention early on. So Friday's high and low is also part of that list I mentioned, especially when we go into things like Sunday or Monday. A lot of times, if we're bearish, if it's reasonable when we're looking at the chart, a lot of times Friday's low or Friday's high, if we're bearish, will be taken if price is going to go lower on your asset. A lot of times it's going to do that little reverse to that liquidity from the most recent day, which at the start of the week it'd be Friday's high and low, right? So yeah, it's just an extra layer of liquidity you want to consider identifying. But yeah, so again, this is my idea for DXY. I hope it made sense. But yeah, if you have questions, let me know in the chat. Otherwise, let's move on to this real quick. Yeah, exactly, like a sweep on liquidity. Exactly. Let me bring this up real quick too. Try to pull up all three indices real quick before we go to the individual. All right, so taking all we've discovered, right? We finally made it, right? But taking all the stuff that we just discovered, from the economic calendar to all the other assets we just dissected deeply. I'll be, okay, you trade forex. Well, all this stuff, like I mentioned earlier, dictates what the currencies are going to do. I just noticed that I did skip over, well, I didn't really skip over this, but I kind of breezed past the currencies. Since you trade forex, let's talk about forex real quick. Real quick. So yeah, we could see how, oh man. Yeah, I definitely see this as a potential likelihood. Notice how we left that low on EU. We literally left that low. That's equal lows, like I said earlier, paired with a higher time frame pool of liquidity. In this case, it's a it's a weekly fair value gap. I am confident, unless something dramatically changes, that price is going to blow out that liquidity pool. I'm fairly confident because that is just reasonable. Imagine knowing what we know about liquidity, knowing what we know, whether you've been trading ICT for a year or 2 months or 10 years. Just imagine the idea behind liquidity, equal highs, equal lows, higher time frame PD arrays like we just talked about. You think that smart money is going to leave that? Even if they were to, end up going higher, like maybe they run the low and then go higher, even if they're going to do that, this should pop off and smack you in the face when you see stuff like this. But this again is why the higher time frame is so important, because whoever's stuck on the 1 minute chart, they wouldn't see this low. I mean, they may see this low from the previous week, right, or Friday or whatever, but just think about the depth that we've went into this morning and how much different that is compared to everybody else. Majority of people don't take time like this on their analysis. Majority of people don't look at these other assets. They think it's too complicated, blah, blah, blah. But that's why I'm going to stop trading until bias is clear. Yeah. If you go into the market and you have no idea where price could potentially reach for on that higher time frame, unless you trade intraday volatility, and you understand intraday price action and the structure without the higher time frame, which obviously is possible. But again, you want to be able to layer that on top of, even if you're a hyper scalper that's on the seconds chart. You still want to have that larger context, because you don't want to get caught in price going higher if we're in a weekly bearish trend and then price completely obliterates you to the downside because you were forcing buys on that 1 minute chart within a bearish retracement on that higher time frame. But the 1 minute maybe was making you think it was bullish or something. It's very important. Very important topic there. Very, very important. But yeah, that's my opinion on the currencies, right? Similar to what we were just talking about in the other assets. When price is opening up here, where's the most recent liquidity? Most recent liquidity. I mean, look at this too for GU. We even got these equal lows here. I am confident we're going to blow these out. And if that's the case, then all the stuff that we just talked about with the yields, the bonds and yields, how the yields should go higher, DXY should go higher, the bond should continue to drop because of what we've discussed all morning. This makes this even more valid. You see how it makes it an easier decision to think, okay, I'm pretty confident based on all these other assets we just dissected that it's reasonable to anticipate price is going to blow out these lows here. Right? You could see how decisions become a lot less uncertain. Obviously, nothing is perfect. Anything can happen. But based on the stuff that we know and the things that we learn and apply, obviously, you could see the efficacy to this. If you backtest and look at the relationships we've discussed this in this call, and then obviously from the past couple months, you could see that pretty clearly as well. The problem, I trade CFDs, and you're using... Oh, okay. Yeah, you trade CFDs. I'm assuming you're not in America. I was CFDs. The problem, I trade CFDs and USD. Oh, yeah. Yeah, I'm looking at the futures contract. Yeah, that is very interesting. That's one of the issues with forex is everybody else, like every company, every liquidity provider, aka broker or whatever you want to call them, they all have their own liquidity, their own control over specific price levels. Like they can either, they have leeway to be off a little bit, is what I'm trying to say, right? That's why all the different charts look a little bit different. That's why futures are the best, because one data chart is what everybody watches. That's what took me away from forex, because I was trading forex the whole first year. I never was trading indices or anything else. I was only trading GBP USD. That was my baby. That was how I got 3 funded accounts, the first 3 that I got with FTMO, until they got rid of US clients, unfortunately. That was brutal. I lost 400K funding because they no longer accepted US clients. You know, things happen to us as traders that are unfortunate, but that's why you want to try to solidify the skill set, so even if something takes place like that, you're still able to go in and make a living. You're still able to go in and make an impact on your life, because you never know when these funded accounts will disappear. You never know. You really don't. And with regulation and all these different things, especially in the US, you got to make sure you're with a good company. And it's not the best idea for anyone to put all your hopes and dreams on a funded account. You want to think of a actual regulated broker. Wherever you live, hopefully I think they offer regulated brokers in other countries. I've never been out of America, so I wouldn't know. But yeah, the risk is so high. And when we put our goals, our aspirations in life in the hands of something that could just be stripped away, it's very, you got to think about life in a risk management perspective, not only with trading. Is a risk versus a reward good, right? Are you able to mitigate the risks? Obviously, the way you mitigate the risk of a funded account is to have a personal account, which I have as well. I have a couple personal accounts and a funded account through TopStep. Oh, yes, I was scammed before. Yeah, we all get scammed, brother, unfortunately. I'm grateful that you never gave up, and I hope you're proud of yourself for not giving up either. And again, you're seeking the right information, and I'm grateful that you're giving me the time that you've given me to sit here and listen to what I have to say. That goes for all of you guys that have been here and faithfully come over here. Because again, I only do this because of people like y'all. I could be living my life off the internet, which eventually may be the decision because it's just toxic and a lot of distractions. But it is what it is, right? But yeah, that's my opinion on the currencies as well. So I could throw that in there. And like I said, we'll come over here to the indices and we will call it a day. Right, so we can see how price delivered to the downside. If you go look at my Instagram, you can see that I called this. I called for this to take place. I said the invalidation points, and I walked the whole thing on Instagram. I was going to put it on YouTube, but it was like a minute and 30 seconds for pretty much all those videos I posted on Instagram, so I couldn't put it as a short, which is unfortunate. But yeah, all this stuff that we've just been talking about, well, at least for the indices, I literally broke down in 1 minute and 30 seconds. And then I did like an overview on it too in like a minute and 30. So it doesn't always take this long. Like if you're doing it on your own, it's not going to take this long for you when you master this process. I'm just making sure that I don't miss any bullet points because I'm sure there's some things that I've talked about that you guys haven't considered, either perspective wise or process wise. 10K followers, because yeah. I feel like it's a good decision. Like if you don't have any reason, like if you have no reason to be on social media aside from entertainment, why do it? We have real life that we forget about when we're stuck on social media. And unless we're helping people or doing something worthwhile, it's unless you're trying to learn or use it productively, it's toxic to you. It really is. And these algorithms that they use are toxic. They're made to make you addicted. Unfortunately. It's a, double-edged sword, but, it is what it is. But yeah, we can see how, here, let's just kind of start fresh. And then get through this quickly. I don't want to keep you guys here too much longer. I know it's been a little longer than I wanted. But yeah, so again, we go back to the idea of, what's the most near-term liquidity? First thing you look at is previous week's high and low, right? So we map that out. High. So that's our range, right? And if price is going to break lower, we would definitely like to see how this wick is respected, right? Because if price runs higher, so in a downtrend, wicks like this, or if we're in a downtrend and there's like an up wick as well in some capacity and price pulls back into those levels, those act as unlisted PD arrays. The PDA matrix is, it has like the main elements, the main points of interest that ICT likes to highlight for us. But there's some like volume imbalances. There's some like wicks like this, the midpoints. Things like that are also PD arrays. So if price is to open up and retrace back into this range here, this should be looked at as a premium array, right? Premium array being because we're going lower, and points of interest that are bearish that we highlight, if price runs into that, going against the bearish trend, if it's going to hold, then we're going to stay bearish. It is a level that can act as a potential premium array and have a response in the direction of the overall narrative, right? So if we take that, right, we look at that, we have a couple areas of interest to monitor based on what we're looking at here. But then you also want to pull up some of the things we see down here. So remember what I mentioned a second ago in the other asset, in the currencies. We have equal lows, and then we have a bit of this fair value gap that was pushed into and price pushed away, but a left and inefficiency still. So again, if we're going to be bearish, we have a inefficiency here. Then what else do we have? We have an order block. Okay, so let me, where is, oh, there it is. All right, make the colors correct. So we have a weekly fair value gap down here and a weekly bullish order block. This could have been reasonably looked at as a potential area for price to want to run higher from. But again, we have done things that don't justify continuing for price to continue to go higher, right? We've already shifted market structure here in a very strong capacity. If you look at the highs here, we have SMT at the highs here. And again, we have the shift in market structure. This bullish order block was violated. Price has tried to go back up, but it hasn't. So bearish PD arrays, we got this volume imbalance here. We have the up wick, like I mentioned about this wick. And when I talked about the wicks a minute ago, you see this up wick here. When price pulled into it, what did it respect? Show the validity of this concept I just mentioned. Again, I didn't create this or identify this on my own. ICT mentioned it, but it's one of those things that goes over people's heads. But yeah, you can see how effective that is. And it acted as a what? A premium array. And price was it was in a bearish environment. Price shifted market structure here. And then once price respected that, we are fully in alignment with price going lower. Because now PD arrays to the downside have been violated. There's a shift, and now there's bearish PD arrays being respected. And now I'm entirely behind the fact that price is potentially going to reach to these lows, given all the stuff that we have just layered on top of our process in terms of identifying the current narrative and the information that we have at our disposal at this very moment, right? In terms of, what price could do, keep in mind what we talked about earlier about those other assets. If we're thinking of power 3 going into a new week, it's not unreasonable for price to open here, leave this low, maybe retrace to position the manipulation of the power 3. Preferably, we'd like to see it stay below this midpoint here of this wick, right? I mean, I guess you can make the argument and get this midpoint as well. But I mean, they're kind of in very similar spots. So I mean, you could, maybe use this one because it's lower or whatever. But nonetheless, inside this area in here, I would not want to see that violated. Like, if we're going to go lower, if it does violate this, it's not as bearish as I'm anticipating. That's what happens if this breaks. If it just punches aggressively through this, then that's just showing us that, things may not be as bearish as we would like. Right? So definitely something to consider. But I'm assuming that the weekly low, if we do stay in line with the downside move, based on all the layering effect that we had this morning, which again, I hope you guys have thoroughly been able to understand and visually see the efficacy behind them, like the different analysis we were doing. I'm assuming that this low is going to be my target. Hopefully, right? If everything continues the way it is, we will target this area here, this fair value gap. Unless something dramatically changes, this is what I'm going to stick to. I'm going to stick to this idea. We're going to continue to press targets below price because we're in a bearish trend. Bonds and yields look like they're going to support bearishness. Yields going higher, bonds going lower. DXY looks like it still wants to go higher. The currencies, foreign currencies, look like they're going to go lower. We have equal lows that are very obvious that should be able to be reasonably used as a target. And again, that justifies the indices going lower as well, right? All that layered together helps you see a pretty beautiful picture as far as all the different assets working in tandem with each other. Things are in sync with this going lower. Now, again, if that changes, like we start punching higher and things start to totally change and reverse and start going against the analysis that we've done, then obviously we make adjustments and we continue to monitor what is happening in the market, because things may change. We don't know. But unless something changes, like multiple PD arrays get violated, or things just start to go against the levels that we have mentioned across the board with the different assets, then obviously that's when we make adjustments. But otherwise, we stick to this, because this is a very obvious logical target. Relative equal lows. We have a previous week's low here, right? Again, that's relative equal lows from the weekly chart, layered with two PD arrays that should be able to act as a magnet if the downside narrative is going to continue. We have the wick midpoint. Okay, so that's our line in the sand. We want to see price not go past that if we are going to be extremely bearish and do a justifiable move down to this area. So yeah, with all that in context, right, it's reasonable for us to see price open up here and pull back, to then possibly look to use that as a bearish power 3 context to then target the weekly low here, this weekly low, all the way until we get down into this level here. This, in my opinion, can easily be reached because of CPI. We may start the week go against that idea to try to entice traders, because guess what? It's manipulation at the beginning of the week for the most part. But other than that, right, we should be able to see CPI give us something meaningful, in my opinion, potentially down to a level like this. All the levels that I've mentioned across the board as a potential target in the other assets we have observed this morning, they're all keeping in mind the context of CPI and power 3, and how the early start of the week may be a little difficult, but then CPI will come, and in my opinion, it'll probably get us to these levels that we're identifying. Or the other scenario is CPI will be used to upset all of the stuff that we've done today, and then that would just position us to adjust our views on what we see in price. But until that happens, until it's proven that this is not the case, that price is going to go lower in the indices and higher in the DXY, we're going to continue to monitor all the things that we've talked about. All right? And it's pretty much the same across the board over here, right? The NASDAQ, we have a similar situation to this, right? We got the weekly low here, weekly high. Midpoint of the wick was respected. It's across the board that these things that we've talked about take place, right? And then price ended up digging lower. There's this order block here. Notice how the midpoint of that order block has been closed below and violated. That makes me feel like it's pretty interested in going even deeper. We have somewhat relative equal lows, but even if it's not relative equal lows, if we're going to continue to go lower, we still have a weekly low here to target potentially, given the fact that we shattered this for this order block midpoint. We also got below the volume imbalance here, which I'm assuming is a new week opening gap as well. That's generally what these higher time frame volume imbalances are. They're kind of large new week opening gaps in many cases. But yeah, we'll see if we can stay below. I'd prefer the NASDAQ to stay below that, right? If we could stay below that, that's literally showing you that it's extremely weak, and it's not unreasonable for them to want to target these levels down here. But yeah, so that's pretty much everything that I wanted to cover, I believe. If I think of something else that I didn't cover, which I think I covered everything, but if I have any other things to mention, I'll mention them on my Instagram in a little quick small video for you guys to look at. But before we close, I would definitely like to know if you guys have any questions, if there was anything unclear in the conversation we have had this morning. And yeah, I hope that you guys have gotten a ton of value from what we've talked about today, because all these different things. This is a repeatable process we just went through today, and multiple months prior to this. It's a continuous, like if you go look at some of the older videos I did from the last couple months, you'll see it's all the same. It's continuously the same. Situations change a little bit, but the validation invalidation process, the identification of liquidity, which I gave you guys a specific list of liquidity to always keep tabs on, because it's a constant flow of liquidity that you can identify. If you're in the chart wondering, oh, where could price go? Now you got a list of liquidity that you can jump to. Just jump right to one of those, or multiple, and then obviously the intermarket relationship process, it's all the same. Different little quirks here and there, like using the wicks, identifying the wick midpoints as either premium arrays like it was here, or potential discount arrays if we're going to the downside. Overlapping wicks like this, right? You can use the midpoint of those as well. Identify those as potential PD arrays. See how those continue to either confirm or negate whatever your potential ideas are and overall analysis is. And then obviously the economic calendar, right? When you see the red folders outside of NFP, FOMC, CPI, rate announcements, outside of those, the economic calendar is identifying for you or scheduling for you the potential for pretty fast-paced, low-resistance moves. Another thing I did want to mention, many people probably didn't discover, or maybe it just went over their head, is, if you see price overlapping like this, right? Like if you see candles just overlapping like this, right? Like you have a big candle and then another one overlapping on the weekly or on the daily time frame. If that is taking place and it's just back and forth like that with overlapping candles, you need to look at that as a high resistance environment. If there's no news at all, right? Like Sunday and Monday is going to be, like today and tomorrow is going to be, those should be considered as potential high resistance environments because there's no volatility injection. There's no injection of liquidity to send price in a low resistance fashion. If you see fair value gaps in a price move being fully filled every time, that's not a low resistance environment, right? If it's fully filling in every fair value gap and it's not delivering quickly away, like with speed and distance, that's another signature in price that you can identify. Okay, price is, in a somewhat high resistance environment, because fair value gaps should be quick and dynamic. It should be fast. You know what I mean? When you see when you're in a price leg on a lower time frame and you start to see fair value gaps not getting filled at all, and it's just quickly moving and just barely tapping into fair value gaps and running, you're in a low resistance environment. So you go back and study some of these things and you'll see it's really, really powerful stuff. And of course, time of day, right? If you guys don't know, you should always, let's try this, right? So from today on, any opportunity that you are considering taking, whatever session you trade within, make sure your entry tactics are only positioned during macro time frames or time windows. What is a macro for some that don't know? The last 10 minutes and the first 10 minutes of every hour, like that, that 20-minute window, those are 24 hours a day, right? Every single hour of the day, that's a macro, right? That's a time where price uses whatever it has at its disposal to then deliver or do what ICT calls spooling. So moving forward, maybe for the rest of the month or so, however much you want to try this out, try to only take entries within those times, because I guarantee if you go back and look at your losses, majority of the time you weren't taking entries at the right time, so you got pulled around, dragged out, and possibly stopped out. Or you were maybe in one of the environments that I just mentioned. You're maybe in a higher time frame, overlapping condition, right, where all the candles are overlapping dramatically like this, presenting high resistance. You were trading on a day that had no news, right? Maybe it's a accumulation of those things, right? A basket of those things together on a CPI day or on an FOMC day, right? Maybe you took entries during all those times and you blew your account with all those factors in play. You know, if you go back and study your stuff, if you take good notes and you journal very well, you're going to be able to see that one or multiples of those things were a factor. They played a role. Or maybe you were in the manipulation portion of the Power 3 and you were trying to force a higher time frame direction, and you just unfortunately got stopped out just to see price go in your direction. You know, those are different things that will play an impact, or they'll play a role in have a negative impact on your engagements in the market. You know, but there's ways to narrow things down and make it a little bit easier for yourself, whether it's time, whether it's identifying some of those signatures that I just mentioned, in terms of being able to anticipate potential high or low resistance environments, and so on and so forth. But the high resistance can change. No, there's high resistance that goes to low resistance back and forth. It does it all the time. If you're on the lower time frame, you know, you can identify those types of signals overall fairly consistently over and over and over again, because we go from high resistance to low resistance, high resistance to low resistance. But again, I'm talking about in the context of the higher time frame, right? Because if you're able to identify if you're in a higher time frame, high resistance environment based on some of the things we just mentioned, then when you go to the lower time frame, you're able to gauge your risk properly. You're able to drop your frequency in trade, right? Like, you're not going to take 20 trades within an environment like that. You know, if you know that the higher time frame is promoting the fact that, hey, we're in a higher resistance area, there's no news, we're in a consolidation, and maybe you haven't practiced trading within a consolidation, which I have knowledge on and I could teach you guys about if you want. You know, but if you're new, right, if you had like a year or so, you don't want to push that. You know, you can get to that point and you can damn near trade every day. Doesn't mean you won't take losses. You know, if you trade every day, you open up more opportunity to be violated. You know, and if you don't have good risk, I mean, that's a recipe for disaster. And you add on all the things I just mentioned, it's just a disaster. So I realized most of my losses were due to the fact that I entered trades right before macros. See, that's the thing too, right? When it comes to the macros, that doesn't mean once we get into the macro time frame, or maybe we're right before it, that doesn't mean you just take an entry just because, right? Not saying that that's what you did, but that's the thing. You want to gauge the scenario and whether your model is performing at the time of the macro delivering to a specific liquidity pool that many times you can get from that list I shared with all you guys today. And you'll see, you know, you can make little adjustments, like only taking trades that line up with a macro where your model is showing, only looking to take trades that you can frame around higher time frame narrative and those liquidity pool, that list of liquidity pools that I mentioned. If you can't frame an opportunity and enter at the, like within the right time, like a macro inside of a kill zone, in line with the higher time frame direction that you've assumed based on all these things that we did today, if you can't frame things like that, the probabilities are lower. Because all these things that we have done help put probabilities in our favor, or put us in a position where we're trading in an environment that's possibly more favorable. Can't guarantee anything, obviously. Nothing's guaranteed because people make mistakes. They get impulsive. They break their rules. They overtrade. They overleverage. All these things that are detrimental to the success of a trader. You know, but if you can practice following the rules, not put too much stress on yourself to hurry up and make money, because right when you start thinking that way, you're done. Like, you're going to make bad mistakes. That's like, again, going 100 miles an hour in a 25 mile an hour area. You're inviting possible issues. When you can just slowly become a professional, whether, you know, maybe it takes 3, maybe it takes 5, maybe, you know, for you guys that are really young, maybe it takes you 10 years. You know, hanging around people like me, it won't take you that long to gain clarity. But profitability, doing things full time, that's a process. It's a process that, you know, most of us, it's a process that takes longer than most of us want it to take, because not because the concepts are complicated, because the concepts you can master in like a year or two, at least get a breakdown of what you need to be doing, what you need to look for, how to call bias, validation, invalidation, risk control, higher time frame analysis, if I didn't mention that, and so some of the other little factors. All that stuff aside, though, there is the psychological management, the personal accountability, the self-control aspect that a lot of us as human beings are flawed in. We have a lot of flaws when it comes to personality, many people, right? And if we're all humble, we'll all be able to admit that fairly simply, and honestly, and if you're able to admit that to yourself, that yes, I have flaws, I just need to identify them and work towards fixing them, that's a big chunk of the battle, because then you can identify issues rather than some of these dumbasses on the internet saying, oh, I'm perfect, come follow me because I'm going to sell you something, you'll never lose, all this nonsense. If you don't act that way, it's a whole lot easier. And even if you guys get on and like make your own accounts, and maybe you want to showcase your journey, maybe you want to document your stuff, and you're just honest, like I try to be majority of the time. I try to represent what it means to be a trader, and it's not perfect, but there's a space for that. And if you feel comfortable doing that, like I said at the beginning of this call, the industry needs more of those people, and if I can inspire you guys to have confidence to do that as well, maybe sometime when you feel comfortable doing that, it's highly, highly encouraged. Not if you're going to get on and try to sell people signals and fake a lifestyle, rent a Lamborghini, and lie to everybody how it's going to be perfect and everything's going to be simple and easy. Just, buy my course. Like, not if you're going to be that way. We don't need no more of those people. Okay. But if you're good and you're honest and you're willing to come provide value to people, then, it's very much encouraged. And if you if you end up selling some type of service with those morals and values in place, there's no problem with that. Just like Casablanca said, there's no problem with thinking that way, aside from what everybody, with the foul taste in people's mouth that's been left by all these idiots, aside from the posers and idiots that try to, sell people dreams, and, they're living a freaking nightmare. Okay. They're trying to be on some nonsense, but if you come in with the right intentions, if you have actual value, if you put in the work on yourself, and you become a person that you needed when you first started trading, then there's no problem with having a YouTube channel. There's no problem with selling a service, because with ICT Concepts, we create our own systems, even though we have access to very similar information, or pretty much the same information. Even if we use the same entry tactic, does everybody look at the market like I have shared today? Does everybody do this analysis, this process, very organized? Do they have risk control the way I have, or the way you have? Do they have the same mindset? Do they deal with their emotions the way that you do? Do they have a process to doing that? What time frame do they take entries on? Right? Are they a swing trader, day trader, scalper, position trader? All these differing factors provide evidence that this will never change. And it provides evidence also that everyone that learns these concepts can have something that's their own. It doesn't always have to be attached to, you don't have to think like, okay, just because everyone's learning a specific model, that must mean everyone's the same. No, it doesn't. Someone that's trading the YouTube model, for example, they could take a sell while I'm looking for buys, right? They may just look at the indices and the DXY, or maybe they trade just currencies while I trade the indices, right? The point I'm trying to make here is that's part of why I love these concepts, and why it's highly encouraged for you to also consider some of these things, right? You get to maximize the value you can also provide to others, but then you can also maximize the skill set for yourself in your own circumstances, and maybe even the people around you. And I think looking at the business of trading from that view keeps every single door open. right? However you want to position yourself, right? In this industry, however you want to manage your business, you can make your business your own business. And just because you're following similar logic to someone else doesn't mean that you can't be part of those opportunities, and build something of your own. Just because ICT teaches YouTube model breaker and all these other things doesn't mean you can't create something that's your own. Don't be an idiot, okay, and try to go through his content and then just teach it verbatim, right? You got to have your own personal views on things. You can't just be a copy paste, because there's ways to do things on your own, which I hope those of you that spend a lot of time here with me start to realize. So I did talk about the whole process, Alex, in terms of bias. In a nutshell, though, I think NQ is most likely going to continue dropping. You can kind of see here, I got the potential target. And if you want to figure out why I think that, aside from just taking my, quick opinion, trying to find like a signal or something, you definitely want to try to go see what got me there. I appreciate you hopping on, though. And if you do watch the replay, if you got questions, you can DM me on Instagram, or you can just send a comment here in the comments. I'd be happy to answer any questions. But yeah, in my beliefs, if I'm not happy without Lambo, even if I'm gonna buy, but yeah, I'm not gonna be happy. Just process, even more knowledge and family happiness. Yeah, in my opinion, like, these materialistic things are wonderful, right? We all want nice things, right? But if that's the only reason we're trading, because we want to buy a Lambo, or if we just want to make an unlimited amount of money, then you're going to be easily swayed. If hardship hits and you're not at $1 million in a week, you're going to doubt yourself and you're going to quit. And if you don't have all these things that we talked about today, fortifying your skill set and fortifying your belief that you can do this and this can be systematic and you can make this your own and personalize it and have your own flavor to it. If you don't think about things in that way and you're only focused on money, which is obviously the end goal if you do all this stuff that we talked about today, if you do things properly, then it's going to be a lot more hardship. It kind of goes back to what I was talking about earlier about funded accounts and your goals with funded accounts and how you're going to utilize them. You got to think reasonably. All these big time funded traders, they don't have one giant account that they're trading massive size in and making these big profits. They have layered amounts of accounts, right? They have like 20 accounts, right? Like, for example, my good friend Jade Cap, right? He has many accounts and he risks 0.25%. I think he's even mentioned this on his YouTube channel. And if you guys haven't checked him out or you don't know of him, you definitely should. He's OG. One of the people I greatly respect. Because he's just like, he's just like me. We're very similar. A lot of the ICT students that have done well, that have actually gone through the process, that actually know what's going on, that actually know the realities, and they spent time focused on how this stuff actually works. Majority of them have a very similar mindset. They're not over risking. They're not over leveraging. They're not selling you some crazy, insane dream, and they have value to provide to people, and they've personalized things to them, to their own way of trading. We all got information from a similar source, the same source. Some of us have other people that have their own views on specific things that kind of mesh well with ICT concepts, which are smart money concepts, by the way, for anyone thinking smart money concepts and ICT concepts are different. I don't know what to tell you, but they're the same. The same person created the lingo. Nobody else was saying smart money concepts before ICT. Everyone that is profitable as an ICT trader has very similar things. Exactly. It's just a name. Yeah, Alex, if you want, bro, you can shoot me some DMs so we could kind of have a conversation about, some of the reasons I ended up putting that, because there's a large context. Looking at it from face value, I mean, yeah, it could be very easy to think, okay, yeah, that looks pretty reasonable. But the reason behind why that's even likely to take place, that's the very important aspect I don't want you to overlook. And again, if you got time, if it's within reason for you to go back and kind of review some of the things we talked about today, I think you would probably get a lot of value. And I, appreciate some feedback as well if you do choose to go do that. I appreciate you being here, Alex. This SMC traders identify new strategy. Yeah, no, supply and demand. It's, they've tried to bastardize and take credit away from ICT. And mind you, people don't like ICT, and there's haters and all this crap. People need to realize that, if you're at your job, who forces you to love your boss? Are you there to make a paycheck and provide value to get money? Or are you there to love your boss? Right? You want to look at educators the same way, unless, obviously you build a relationship with them. If you're looking for a particular outcome, who cares about how this dude lives his life, or how he talks, or what he says, or what he does or doesn't do? What's the proof that this stuff works? And can it help you if you dig in and disregard the man, but focus on the process? ICT's built relationships with a lot of his students, and those are the ones that stick around, and some can't remove the fact that, you need to separate the antics that he does for marketing and, the crap that he can or can't do. Like, just remove that and focus on the concepts. The concepts work. And the proof of that is not ICT himself. You can look at him and judge his performance and judge the concepts as a result, that's doing you a disservice. But a better option is to observe the people that employ the concepts and come out here and prove it and showcase it. Those are the people, or that's the evidence you should focus on, and then do it yourself as well. Disregard how you feel about them. For those that, maybe don't like ICT, or, if you guys know people that criticize ICT for his personal antics, that he does 99% for marketing, okay, whether you want to believe that or not, just separate the man. Look at the concepts, because I promise you they're worthwhile. Whether you trade retail logic and don't want to let go of it, even if you choose to do that and have other tools, the concepts, like we talked about today, the bias concepts, validation, invalidation, narrative identification, liquidity identification, a whole plethora of things that we've talked about today. Aside from entry tactics, if you just layer some of this stuff on whatever you do, it doesn't matter what you choose to do, it helps you. And, that's what I hope people, I hope people start thinking more like that, because it's unfortunate that so many people get distracted from the crap that he says and the things he does. I don't agree with all the stuff he does. He's a wild man. Like, I'm not here to be his... like his ambassador for everything he does. I appreciate him, and he's changed my life. And, but he even says himself, you can't give him the full credit. So if that's the case, there's no reason to put so much stock in the man himself. You can appreciate things, but oh yeah, Alex, I use seasonality. I actually have that pulled up in a in a thing here. I totally forgot to talk about it. Here, let's see, where is it? So yeah, let's look at the US dollar real quick. I appreciate you reminding me, bro. Shit, I knew there was something I was forgetting. I knew it. All right. So yeah, if we look at seasonality here, let me actually give y'all this. So I want you guys to, I'm gonna be quiet for like 29 seconds so I can have like a segment of this that you can just record, because I scroll through, as you see. I go from January all the way to the end. So I want you guys to have this resource, those of you that are on YouTube, aside from my private community, because they have access to this. But yeah, so let me pull this back. So I'm going to be silent for like 20 seconds, and I want you to screen record this, okay? Here, actually, let me move the screen a little bit. Can I move it? Sorry, I noticed that my thing over here is in the way a little bit for January. Well, I can just tell you. Or actually, here, let's just do this. You can see January. It's kind of choppy, sloppy. So going into the new month, obviously, you can think like, okay, you know, it's going to be less favorable, essentially. Oh yeah, no worries, Maddie. Thank you as well, man. You always hop on. You're always active in the private community. Appreciate you, brother. God bless. Hope you have a good rest of your day. As always, let me know in DMs if you need any help with anything. But yeah, so just look at this real quick, right? So it's a little bit choppy, sloppy. Yeah, with that being said, now I'm gonna just let you see from March on, so you can screen record. There's a DXY, and then let's do the NASDAQ now. So you can see the NASDAQ, right? Kind of choppy, sloppy. So what do you assume when that's the case? You look at the fact that all three lines are kind of not really dedicating anything, right? When all three lines are not in agreement with a particular direction, the seasonal influence is not really relevant. Okay? So you want to keep that in mind. When you see times in price, like for example, like in July, right? All three of these lines are rapidly moving in the same direction. So the assumption would be that July, or in this time window here, close to July and August, right? Things, you know, pick up. But once we hit August, right, things start to, you know, kind of have a bearish tone. Things are a little bit disjointed, right? So things can potentially be a little risky around that time, right? I do have a list of seasonal influences I'll give you guys too right now, so you could screenshot it. But here I'm gonna pull this back again so you can just record this as well. All right, I'm gonna do it now. All right, for sure, Alex. Just want to do that just in case for those that you know, don't really have access to these things, because there are lots of paid accounts, like paid tools that you know most likely want to use. These are the most updated from MRCI, the resource ICT mentions. I subscribe every year, and then I get the screenshots I need, and then take that and provide it to the community. Right, and of course there's a bunch of other stuff you can get as well, but again, those are just the main focuses. And then I wanted to pull this up as well. Just one more thing for you to screenshot. So this is from ICT's mentorship stuff. It's something that I felt as I was studying a couple years ago that would have been very helpful for all different kinds of trading, so you can know what is likely. Mind you, you don't take this as a be-all end-all. You take this and you go and study it. You go into your own charts and you choose the asset that you have, in this case one of the indices, and then you study it from the last 10 years and you compare and contrast, right? In January for the last 10 years, what did it do? In February for the last 10 years, what did it do? So on and so forth, and you take those notes, and then you kind of get a feel for when the strongest seasonal influences are, and then obviously when the seasonal influence is potentially present, but it just doesn't operate that smoothly. In this case, June. Remember how we just mentioned July is bullish, right? And we looked at the chart and saw how the chart provided that before I gave you this information. So you'll start to see, and over the years, when you have this resource, you'll be able to use this in your trading and have an anticipation before you go into the market every month, just to layer on top of your higher time frame analysis process that we did today, right? I showed pretty much the whole process of higher time frame analysis and how you can prep for the week every week. Simply, very easy, not complicated, to the point, right? We did have a conversation at the beginning of the call, obviously, because, you guys are amazing and ask questions. But yeah. Right, so... Oh my God. Yo, Casablanca, you're wild, yo. I mean, I could see that. Shit, I would date Tanya. I would date her. Shit. She hot as hell. Not gonna lie. But hey, there needs to be more women that trade. That's for sure. That is for sure. Yeah, that is hilarious. Make it hard for me working in real work. There's no way many people watch ICT. But yeah, no, there's a ton of people that watch ICT. Probably tens of millions at this point. Because I'm sure he has the eyeballs of elites. Like the big banks, all these people, because a lot of them don't even operate within this stuff. And again, they don't use lower time frames because they don't have access to it, because they have big, huge volumes of money that they got to put in, and they have to slowly position themselves, which is why things take a little bit of time to progress over the week. You know what I mean? But yeah, it's you never ever have to worry about these things going out of style or not working or any of that stuff, just because the simple fact is, everyone does things different. Like I mentioned earlier, everybody can learn the same concepts in trading, specifically learn ICT concepts, and that's what we're talking about. But everyone can do it differently. Everybody uses different time frames. Everybody does different framework. Everybody, even if they use the same model, they'll enter at a different time. Some people take more profit. Some people take less. Some people are profitable. Some people are not. Some people follow rules. Some people don't. There's so many different factors that make every engagement in the market unique. So this stuff will never go out of style, ever. Doesn't matter how many people trade it either. Because there's always going to be those people that, like in America, right? Everybody can own a gun, but not everybody's going to be able to know how to use it. You can't just throw anybody in the military and they'll be effective. Everyone can have the same tool, but not everyone's going to be a sharpshooter. Not everyone will hold the weapon the same. Not everyone will, use the same ammunition, right? There's a lot of differences. And that is like an insurance policy for us to all know that this stuff will never go away and we don't have to worry about it. And another thing too, like there's people that hate on the concepts. Don't let that sway you. Okay? Pray for them and try to be graceful with them, because the more we try to be combative with people about these concepts, because we're trying to, for whatever reason, protect ICT or anything. I mean, I criticize things that I feel need to be criticized. But if someone's trading something different, we should not criticize them or think that we're superior. Because, what does that do? If they think that the whole community that trades ICT is ignorant and has this crazy ego, which is something that gets copied from ICT, which is, you don't want to copy that, because it just pushes people away and it blocks their blessing. And we don't think about it that way. A lot of people don't think about it that way because, they just don't, right? But I just feel like we got to be the change we want to see in the industry. I think there's too much toxicity, there's too much dumb competition, like who cares what everyone else is doing, or what are you doing? The only thing you should think about is like, how can I increase my lifestyle? How can I get to my goals? And if you do get in communities like this, or if you do run across somebody that doesn't trade the same, just try to be kind-hearted to them, because, I see a lot of attacks going on and just vicious back and forth. It's always going to happen, right? But, it's just something I wanted to mention. It's just not worth it, because that's negativity. And adding negativity is the last thing we need as traders. We don't need to, be too vocal. ICT does enough chaotic chaos. He does what he does for marketing. We might as well just, take our blessings and exactly, Alex, keep the vibration high so your vibrations will be high. If you, even if, people are going to be people, right? People are going to be insane and try to attack you. But, all you got to do is just block them. Because why let them live rent free in your head for even a second if they got nothing good to say? It's just, just the way I look at it. Because I've learned over the last 5 years that, the way you live your life, the things that you allow your attention to be, taken by, right? The things that you allow your attention to gravitate towards, they're going to impact you. If you're over here thinking that someone else sucks ass at trading and you're trying to out trade them, you're going to be in there breaking your rules. You're going to over leverage, you're going to over trade. When if you didn't think that way, and if you didn't allow those things to even be part of your mindset or, your thought process, you'd be following your rules. You wouldn't be trying to out trade Joe Schmo over there. Joe Schmo over there can't spend your money, and you can't spend his money. So who cares what he's making? The only competition you need to have is yourself, the person you were yesterday. It's like these little things, like these are some examples of the differences in people's mindsets and why some people's performances will be different than yours, even if you trade the same models. So it just adds on to that insurance policy. This will never change. It's going to stay the same. It may get a little sharper because AI is getting smarter, but there's always going to be liquidity. There's always going to be, inefficiencies. There's always going to be these things. So you can always anticipate that there's going to be something. And all the stuff we talked about today never changes. Unless the dollar disappears, because that would change stuff dramatically, right? That would be crazy. So hopefully that never changes. We all pray that never happens, because regardless of how people feel about the US dollar and how our dumbass representatives, aside from a few, behave, if America falls, if our currency collapses, there's so many people riding on our currency when it comes to nations. It would not be a good day for the world, unfortunately. You got any executions, trades you can show? Why do you feel bad about ICT? What makes you feel bad for ICT? And in terms of executions recently, I haven't really done much this entire month. Live calls where I take executions showing the fact that it's a live account, showing the execution labels, all that stuff, that's going to come in February. I hope to see you around that time, Alex. But for now, we're going to stick to being focused on the overall process that gets us to those clarity ideas. But ICT puts himself in an awkward position, like when he tells people, yeah, I know. And then, of course, the Robbins Cup thing. I heard a Twitter space about, ICT's, like, he kind of aired out a whole lot of stuff that did make me think, like, dude, that's kind of, like, extremely over the top, like, weird for no reason. Like, he said, like, I could see, if that's truly how he operates with his marketing. He said that in terms of the Robbins Cup thing, from what I heard from one of the last Twitter spaces he did, he said that he purposely tells the world that he's not going to trade or he's going to delete his account if Bitcoin goes to this, or he's going to do this and do that. He says these outlandish things purposely, similarly to how, like, Donald Trump, like, says and does these outlandish things to get attention. He says he does that to just rile people up, to pull them to his concepts, so then they look into it. When he fails, it's like a weird explanation that he said. And again, that just goes back to, he's going to do his antics. I mean, it worked out. Look, his accounts blew up, like, eyeball wise. That's what he chose to do. And I mean, I guess you can salute the fact that, I mean, if that was in fact the goal, to get attention, and then with the Robbins Cup thing, him supposedly failing the Robbins Cup, I mean, yeah, we could see that he can clearly do it if he chose to do it. But he sees that so many people are using his name. This is what he said for the Robbins Cup excuse. He said that so many people are ripping his stuff off, creating mentorships, and trying to use his name and talk crap about him and do all these things, sucking off his image, that he did the whole Robbins Cup thing so publicly to basically damage his image, so that when anybody sees his logo and they try to go learn from someone that's like trying to be a copycat and like try to carbon clone ICT and not give him any credit, or even the people that give him credit but sit here trying to reteach his whole mentorship without doing like what I mentioned earlier to you guys, and making it personal and promoting yourself, your own brand, your own dynamic way of using the concepts. For those that don't do that, that's why he failed and did the whole Robbins issue. He did it so he could damage his image, so anyone that sees his stuff on anybody else's pages were not able to then market it, because there's a like damaged view because of what he did failing Robbins Cup or whatever. That was his excuse, which, I mean, I guess I could see that's, I guess, reasonable. I guess, right? Like, if that's the case, like, holy crap, dude. I mean, I can't say I wouldn't be the same if someone was just constantly ripping off what I'm doing, not giving any credit, constantly trying to just revamp everything and say they made it. I mean, he even said people in Brazil are basically acting like they found these concepts because they don't know much out in Brazil or other countries in terms of ICT concepts, because in America, he's from America. So it was really relevant here. I mean, I guess some in India too, heavily. But yeah, that's apparently why, like, a lot of the chaotic insanity that he does, which most people criticize him about, apparently it's all on purpose. Apparently he does it to rile people up because he knows it'll pull attention. People will talk about him. But then the ones like us that come here and actually study the concepts in depth and spend time looking into what he's teaching, we can see the value and separate the man from the concepts. That was his explanation. That was something that most people probably didn't get a chance to listen to. But that just goes back to what I said. Like, you got to separate the man and the concepts. And whenever you meet somebody, realize that they're probably polarized by the chaotic crap that he does to get attention, which, I mean, he gets criticized for good reason if he's going to do things that are controversial. But again, it's part of his marketing, apparently. He does that type of stuff. He knows that he has amazing concepts that work, which are proven by us as the student, or the students that have also proven that they can do it as a result. But he just does it for marketing, And he's never ever spent $1 on marketing campaigns because he said that's a very effective way to do things. And he doesn't care how people view him. So, I mean, given that thought process, that type of objective, if that's truly, what his intention was, which I can kind of see because I know how good he can trade. We know if we sit here long enough and we've seen him call it minute by minute, second by second, target by target, week after week, year after year, we can see that, okay, he's not being truthful when he does things like failing the Robbins Cup. Like, he's doing it for a reason. I can see that. But of course, not many people are going to agree with that. I don't agree with that. But then again, I don't have something, I'm not looking for attention. I don't, those that come to me, I'm grateful for, and I hope you guys get value when you spend time here, because that's the whole goal, right? It's to help you guys out. But I could care less if I get a ton of followers. I could really care less, honestly. Honestly, if there was nobody to help, I would be in my own lane. I'm already going to stay in my own lane, because I don't think like everybody else. And I don't think you guys should think like anybody else either, unless it's beneficial and positive, like Alex said, high vibration type of stuff, but yeah, just felt like I probably should have mentioned that, because it's been crazy the last year. ICT's been on a rampage with these antics, but you look at his YouTube channel, and it's now at 1.5 million subscribers. When he decided to really ramp up, he opened he started doing a lot more work on YouTube. I want to say like 3 years ago, and he was at 100K. Like, he had his follower count hidden for like over a decade, and he came out 3 years ago, 3 or 4-ish years ago, turned on his visibility to see how many followers he had, and for literally over a decade he had like 100 to 1,000. And then all of a sudden, when he started really looking to ramp things up and use YouTube as an income, he didn't use YouTube for an income for literally over a decade. Well, then he turned on the ability to make an income, and grew his account insanely. And mind you, all this stuff, like I just talked about, you could see that if that's the goal, then that's the goal. He has no one to impress. He doesn't care what people think. But the ones like us that wanted the information, we got it, and we could see through the cloudy insanity, right? Again, separate the man from the concepts. Anyone that's trying to learn these concepts but doesn't want to because he seems like a lunatic, or did this fake or antic to fail the Robbins Cup so he can damage his image so nobody else could use it, without being confronted that, oh, you're learning from a guy that failed the Robbins Cup. If you meet anyone, just be gracious with them, because understand that he has done that on purpose, so people don't look at his logo on people's stuff, which I could care less, because I can prove I could trade. I do it live, and I do these types of things, and you'll see it, right? Things will play out or they won't, and I'll come out and discuss why and readjust. But I mean, even me, like, I have proven over the last 2 years that it's able to be called. I'm able to be on the right side more than not. So it doesn't matter what ICT does. It doesn't matter how badly he damages his image. I just do it for credit's sake, because I appreciate that man, and I have my own stuff. I have my own brand. But again, I'm here to help those willing to listen. I could care less if I blow this account up and it becomes hundreds of thousands. It'd be great to have a nice following, because then that means I can help more people. I could instill the right value system when it comes, or the right protocols and mindset as a trader in more people, the more the account grows. That's my goal more than anything else with social media, aside from all the other nonsense. But if you have many people, that means more stress. No. See, that's the thing. I don't care what people think. I get it wrong in front of my private community. I have no negative thoughts for me getting something incorrect, because I know, as a trader that understands the realities of trading, I'm going to get it wrong, and I tell everybody else that watches me or comes to learn, I'm not going to be perfect. Neither will you. Neither is ICT or any of these other traders that try to pretend like they are perfect. None of them are. ICT says clear as day that he's not perfect, and if he's not perfect, who are we to take criticism from other people, or look at other people's opinion when we do something wrong? Why are we going to put too much stock in that, like those opinions? If we can't trade or teach or give advice on something without someone's opinion damaging us, then we're not strong enough internally to do that type of thing. Then it's probably best in that scenario for us to not be on the internet if it's going to directly impact. But me personally, I don't care. I get it wrong sometimes, just like everybody else. I know for a fact, and I also showcase proper risk management, how to mitigate losses. I also show very strong consistency when it comes to direction. And then I also showed on my Instagram, and then also my my private community as well, the win percentage I had last year. I had 88% win rate. Like, that's insane. Again, I don't trade a lot. Again, there's a large percentage that I took losses in, 10, 20%. You know, that's a decent amount of losses. If I over traded, it'd be a serious issue. But that's the thing. I focus more on process because, like I mentioned earlier, the money that I'm able to make does not in any way influence what you're going to make. You know, if you sit and watch for clarity, you sit and figure out whether you are going to be able to take the tools discussed and put them into your trading and benefit yourself. Me, the amount of money that I make, or anybody else that supposedly tries to be giving advice, it'll never translate directly to you, because clarity is something that you can achieve through borrowing someone's experience, learning from somebody that proves that they know what they're doing. But the profits you make in a trade will not be duplicated from someone else. You know, like, you can't take the fact that ICT made 10,000 and assume, okay, I'm going to make 10,000. Or you can't see a trader that showcases whatever amount of money they make and assume that since you're learning from them, you're going to make that amount. Because there's mindset that needs to be dealt with. There's process that needs to be mastered. There's self-control that needs to be built. There's targeting that needs to be mastered. And if you don't have the same level, even if you have the same level of understanding in regards to those aspects, the amount of money someone makes is not going to translate to you just because you learn from someone else. That's why you don't see me out here flashing my 5K days. I used to do that, right? 2 years ago, I used to show all the time, constantly. You go on my Instagram and you could see I was showing this, showing that. But I've learned that that is the wrong mindset and it attracts the wrong people. I don't want signal junkies to come and learn. I don't care if they come and view the concepts. I know if they're just focused on how much money I make and how I live my life, if that's their main focus and they're not focused on learning and putting attention to what you guys have been gracious enough to give me your time with, and focus on the things I taught today, right? If they don't focus on what we discussed today and the mindset stuff and some of the things people consider boring, I'm telling you, it's not a good scenario. It's not. And it's very encouraging and it's, this and that. But at the same time, it's like, you're going to have to learn how to pull encouragement from yourself and your results. You making $50 in a month for 6 months straight, that's a win. You should look at that as if you just made 20 grand. Because that $50 a month, if you're able to consistently do that, will eventually turn into something meaningful later. All of that requires nobody else's financial status. Okay. And unfortunately, focusing on what other people make, it's obviously, of course, important for someone to prove to you that they can do something. There's other ways that you can prove it, right? By calling the market, by showing executions and the fact that you're in a live account. It doesn't have to be, hey, look at my 20 grand so I could shove it in your face and sell you a course. That makes me sick to my stomach. There's too much of that. So that's why I don't present myself that way. Although I did do that 2 years ago. I was showing 10K days, 20K days, 1,500 days, like all these different MT4 things when I used to trade with MT4. And it just, I don't know, it didn't seem right because the people that I was attracting to me, they were just not the people that I wanted to waste my time on. It was a waste of time. It's a waste of time. If someone's just going to come and focus on, I need a signal. I can't deal with it. I really can't. And I send out signals, obviously, for those that come and watch the live streams or come and join the private community and want to partner with me in a one-on-one capacity. But, at the same time, the first thing we do is narrow your focus to the right things. So that's a good question. So why do I want to help people? So that question right there is something that is an excellent question. And it's very important for you guys to also, if you have aspirations to do YouTube or aspirations to try to be your own like teacher type thing to help other people and stuff like that, or advise other people in some capacity, not as a financial advisor, obviously, but if you want to teach in any capacity, you got to be able to answer that with something that's outside of, because it'll make you money. Helping people should not be focused through a lens of monetary value. I want to personally help people, and I started showing what I have been doing live, 3 years ago, pretty much at this point, because I knew what I needed help with. I had no one to turn to that can sit there and answer the questions and tell me everything's normal. Losing is normal. You suffering right now and blowing your accounts, it's normal, and it's because you don't have experience on these specific elements that need to be learned. It's not the model that sucks. It's not your concepts that need to change. It's not all these different things. There's specific things like self-control, your personal family situation. How are you managing that, right? Like there's so many different things that we all have questions about as traders, that a lot of times by default reverts back to, okay, my model sucks, or the concept is to blame. When in reality, I needed somebody to be able to instill the proper mindset in me. But because I didn't have that, I had to figure it out on my own. And it was painful. It was like the hardest thing I ever had to deal with. I had a kid on the way when I was first starting to learn how to trade. I had a failing relationship that was crumbling right before my very eyes. Then I also had COVID I was dealing with. I had, family pass away at the same time. I lost my job, like the first 6 months of me trying to trade when I used to do construction. It was just a rough time, and the only thing I was doing was blaming the wrong things. And so the question in terms of why do I want to help people is because maybe people don't have the extremes that I've had to go through, but regardless, in one way or another, the right mindset, like people teaching the right mindset, is lacking in the industry. And I just feel like I want to be able to provide that proper information. And I never wanted to teach people anything, like ever. I never saw myself as someone, let me just go hang out and just teach people all this stuff. I never knew anything that I valued like I value trading. I never had any skills like that I wanted to go share with other people and help them because it would benefit them. I never had anything of value in terms of skill sets like that. And once I learned trading and I figured out what it could do for me, and then, I started realizing what it could do for other traders, like with ICT, like all the students that come out and all those things, like just seeing the impact that he could have made me think, well, if I can do this and I've had to overcome all these things that I've overcame, and I did it on my own, wishing that I had someone that I can talk to that, was willing to sit there and sincerely try to help me mindset wise and tell me where I was wrong and critically analyze the mistakes I was making so I can, try to improve, and maybe help me when I couldn't help myself, maybe just give me some advice to think about. I know that it's all on me to make this happen. It's good, just like it's going to be all on you guys, because I can't execute your trades. But at the same time, I just felt like if I would have had someone there that could have played that role for me, I would have greatly appreciated it, and so it's because of that reason and the fact and just the sheer results that I've gotten, and I know how this can help somebody, whether your goal is just to have an extra income, whether it's to do some of the things that we discussed earlier in terms of broadening the opportunity of trading, and maybe you want to be an asset to someone else, right? Maybe you want to do that type of stuff. Maybe you want to replace your job. Maybe you want to replace the hours at your job and be able to pay some of the bills in your life, right? Maybe you have a car payment and you want trading to pay off your car over time, slowly, right? And just maybe you want to just tackle a few bills to lessen the financial burden in your life. Whatever you choose to make trading, like make trading, attack, or whatever you choose to make trading change in your life, with the right guidance, you can make it happen. And because I knew that, I was like, all right, well, I know how to teach things because I'm not complicated. I'm not a computer scientist. I've never went to college. I don't have a complex mind, in terms of like I over analyze things and make everything like rocket science. I found a way to explain things to myself because this is how I used to learn, right? I used to go into whatever lectures I was studying with ICT stuff, whether it was in his mentorship or YouTube videos that he would post or whatever, that I would just try to add on to everything I was dissecting from his mentorship. And I just looked at the videos, I would listen to them a couple times, and I'd try to think, how can I explain this to myself? Because once I'm able to explain this to myself in ways that make more sense, like in a more like less complex way, that's how I verify that I know a topic, right? And I did this for literally years, okay? And that's how I view everything else. You know what I mean? That's how I look at all the things that I learn. If something's complex, okay, let me listen to this complex idea and let me try to teach it to myself as if I was teaching it to someone else, like maybe my little brother. I have a little brother, right? How would I be able to teach it to someone that has no idea what's going on? At the time, I had no clue what the hell I was doing. I blew my accounts. I lost like 12K in the first 6 months. So I approached it in that way. And then I started just discovering that, okay, I'm able to explain this stuff because I would teach for free too. Like I'd learn some stuff, and they say the best way to know also that you know a particular topic is to go explain it to somebody that has no idea what's going on. Go explain it to them, and that'll prove to you, to yourself, that you know what's going on, right? That you do know that topic, right? So I took the way that I studied on my own, and then I took the fact that I was teaching other people, right? And then I started discovering, okay, I kind of like this. Mind you, I never taught anything before. I never had any skill set that I thought, for one, could help people, or a skill set that I thought someone else would be interested in. So once I discovered those things about myself and discovered that stuff about my trading, that, I enjoy seeing people light up when they finally figure it out. I remember how it felt when I just all of a sudden everything opened up. And I understood the process that I went through today, that I continuously go through. I remember those feelings, and me being able to have the life that I have nowadays and, be able to do the things that I've done with trading. I feel like it's in my best interest that I pass that blessing along. I feel really greedy not being able to share such an amazing blessing with someone else, even if it's people I don't know. Like, you guys spending time with me means so much, because trading is just, it's amazing. It really is. And it's life-changing. And I don't know, it adds so much more value to what it is that we do when we're able to pass the blessing on. We weren't meant to take our blessings and keep them to ourselves. Passing on the blessing is like the best thing you can do, in my opinion, just for humanity. Because a lot of people are struggling. And if you could do something to brighten someone's day, if you could do something or teach someone something or help somebody do something that can really change their life or make them believe in themselves more or be a positive impact to someone in the world, even if it's one person, I feel like you're doing your duty as a human being. And blessings that you give to others will always come back. I truly believe that. So that's why I have came out and decided to help people. So you got to make it mean stuff to you. It can't just be, because I want to make money and, this and that. Because then you're gonna hit hardship, and it's going to be difficult. It's going to be so rough. You know what I mean? And it's just, you got to think bigger. You got to think more deeply about this, because this is a hard thing to do. It's the hardest thing to learn, because you're battling yourself, as ICT has taught. And there's so much truth to that. It's insane. It really is. So yeah, I hope that maybe makes you guys, possibly think a little bit more, like a little differently. If you never saw things from this type of view, maybe you never thought about things from this type of lens. They say doing things for others it makes it a lot harder for you to quit on yourself. But when you do things for only yourself and greedy intentions, it's much easier to give up on yourself. It's harder to let others down than it is to let yourself down. So those are just things that I live by, and I don't know, just it brings more value to the things that we do. It makes relationships, even things like this in this capacity, it makes this a whole lot more meaningful than us just sitting here talking about the markets and, okay, yeah, like this is going to go here and it's going to go there, right? Why are we doing this? Why is it important, and why will I never give up, no matter how hard it gets? If you think about things in a different manner, not only just about money, it's another battle that you're able to conquer. When things get rough, you'll remember, okay, I'm doing this not only for myself, I'm doing this to also be an asset to, anyone I can come across. Maybe it's your family, maybe it's a fiance, maybe it's, you want to do something for your kid. I have a kid too. I did trading so I could have the time and not get my time stolen from people, like companies that don't care. If I died today, they wouldn't care. I'm not going to let that take time away when I have an opportunity to do something that can open up my time with my kid that I love so much. So there's multiple reasons, and then even, that reason is also in part why I also want to help other people, because I know so many people that are parents that, that want to trade for that reason. That reason alone is good. Like that's huge. So then when you take a loss or incur a losing streak, or you want to break your rules, if you have a kid or someone you love in your life and you're doing it for them, if you're going to break your rules and overtrade and do things that are going to damage your ability to accomplish your goals, you'll think twice about overtrading. I have a picture of my daughter on my desk. Every time I sit here, if I think about overtrading, if I think about breaking my rules, if I think about doing something stupid and something I know I shouldn't do, I look at my picture of my daughter and I remember I'm basically telling her that I'm okay with failing because I want to do it my way, because I feel like, no, things have to be done in a specific way to be successful. And you have to have, like that's one of those things that I've put in place in my own trading that prevents me and makes me think twice about breaking the rules that I live by, that have got me to where I'm at, that got me the funded accounts, that got me to be able to build my personal account to a position where I can live off of it. There's these little things. It goes back to the personal aspects of things. There's little things in your life that you'll be able to also put in front of things. Attach your risk management to someone that you care about, to the things that you care about, to the reason that you did this in the first place, that you want to learn this skill in the first place. Because then again, you'll let yourself down much easier than you'll let somebody else down that you care about. It's much harder to, it's much easier to let yourself down than it is to let someone down that you care about. So attach the most important aspect of your trading, okay? The most important aspect of your trading. Attach that, and the reason you have to submit to the rules to someone that you care about. And it doesn't have to be a person, right? Maybe you have other reasons why that pushes you to want to do this. Attach it. Even if you're working a job and you just want to quit your job, like that's the only thing. All right, attach the fact that you need to follow your rules to the fact that you want to quit your job. If you break your rules, you're going to work at that job for the rest of your life. So now if you frame things in that way and you go and try to break your rules, you're going to think twice. You can be like, oh, well, this is a reality. If I don't follow the rules and how things are being taught, how I know I'm supposed to trade, regardless of how I feel about what the market's telling me, if I break those rules, I'm telling myself that I don't ever want to leave this job. You know, if I break the rules, I'm telling myself that the people I care about that I'm doing this for don't matter. And those are the types of things that I conditioned my brain to view. How, like when I view risk, when I view my rules, when I view how my engagements are, my limits in my trade, my risk management process, everything rule-based that I have is attached to my daughter, to the fact that I want to have time with her. You know, so if you can attach it, if you could change your thinking and adjust it to something like that, it's just one of those things that can really, really benefit you. And everyone that I've told this to that has applied this way of doing things, blowing accounts and breaking the rules and overtrading, seem to just magically vanish when they take it serious. It's magic. Just gone. Because like I told you guys, it's easier to let yourself down than it is to let someone else down that you care about, or let something important down that you care about. You know? So yeah. It's a matter of life and death. I'm glad you said that. I have that written down in a couple of my previous journals. Literally, I was like, it's either I do this or I go broke and I become a failure. It's trade full time and master this, or I'm going to fail in my life and be homeless when I'm 50 years old. It is what it is. And to make sure that that's safely worked within, right? Because that seems pretty insane, right? But to make sure that's safely done, I need to follow my rules. If I just blow my account and I'm pumping money in, blowing my account, wasting money because I can't follow the rules, I'm asking to be a failure. I'm asking to let down everyone that I care about, that I tried to do this for, that I attempted or even started to trade for. And again, you will let yourself down easier than you'll let somebody else down. So make that a motto. Figure out what's important to you. Attach those important things to the reason that you will follow the rules, to the reason that you'll be organized, to the reason that you will listen to good advice. You'll never overtrade. You'll never over leverage. Because if you do those things, you're asking for ruin. You're asking to let those people down that you care about. You're asking to not allow your goals to come to fruition. Because there's a lot of people that know how to trade. Like it's not difficult to learn how to trade, like the concepts. It's the inner work that stops most people. Because think about it. Why is there so many people that trade this stuff, but only a small amount are profitable? Everyone has the same information, right? What's the difference? Think about it. The main difference is the ones that follow the rules and do what's required in terms of being disciplined and not over trading, not over leveraging, and making sure that the rules that they learn are acted upon, versus the ones that break all the rules, don't care, they do it their way, they don't want to listen, they just overtrade continuously, just want to hurry up, they have a horrible mindset, and they refuse to change. They listen to no one, just themselves. Right? Those are the two camps. And that's why trading is difficult. Because it's not always about just the technicals. It's majority, the profitability aspect is majority like behind your ability to engage the rules and how well you can follow the rules. You know, because I mean, you guys have probably noticed a lot of the patterns, a lot of the models. I mean, you could see what they look like, but But just like with anything else, like with a hunter, right? If you're gonna go in and you're gonna try to hunt a specific animal, you can know what it looks like, but maybe there's a couple of different animals that are similar. How are you gonna be able to pick out which one's the right one? You need experience, right? Or if you're shooting something, if you're hunting or shooting a target or something, how are you going to become a professional with that? I mean, you can know what it looks like. You can know some of the basics, but are you going to follow the rules and how to aim right, how to load it properly? Are you going to use the right ammo, right? Are you following the rules? Because if you don't, the results you want are not going to be the ones you desire. It's the same with trading. Our models are our weapons. Our processes are how we get to the position of engaging that weapon. And our risk management is like our safety protocols, so we don't shoot ourselves in the face. Okay, blowing our accounts, taking too many shots, over trading, all these kinds of things. So it's much deeper than many people realize, and that's why trading sometimes takes longer than people anticipate. But if you submit yourself now and you think about things the way that we've talked about and you do the processes which we talked about today and really go through some of the stuff and consider some of the things we talked about today, I'm telling you, you will move in the right direction. And of course, this is, it's small elements to a bigger puzzle, right? But, there's a lot of things that we're going to cover this year, If you guys got questions about specific things, we could talk about specific things as well when we get on these live calls. I could even dedicate some live calls to like group calls where I could get some of you guys to ask me questions and we can get on calls just to talk about questions and go over things that, maybe you guys are struggling with. Maybe we could pick a day out of the week where I can dedicate time to just that, aside from trading and all, all that other stuff. Or maybe we could just even do it like we did today, on Sundays. A lot of times it's like this, but yeah. But yeah, guys, I don't want to, sorry, excuse me. Got some crap in my throat. I don't want to keep you guys too long. I know it's already 3 hours. But I hope that you guys got value today. I'm probably going to have to go in and timestamp to get those that want to just look at the analysis to know where it all begins. But I appreciate you guys' engagement. I appreciate your guys' thoughts and opinions and how you guys feel about certain things and sharing some of your experiences with me. It's much appreciated. Again, if it wasn't for people like you guys, I wouldn't be on the internet, right? So yeah, I hope you guys got value from today. We will probably do another, like a check-in call, maybe on Wednesday-ish. I'm not sure. I'll probably start those types of things in February when we have times where, things will be a lot better. Not that conditions are horrible right now. Like they're a little bit difficult, a little bit harder for some. But obviously we've been in lockstep with everything. Like we know where price is going, and if it changes, then it changes. But we're ready for it. We know what will change it and why. We know what influences what, and we know different elements that allow us to trust our particular assumptions. And I hope that those are some of the things that you guys were able to take away from today. And I hope you guys use the tools that we talked about, both from a psychological aspect, some of the opinions related to that, but then also obviously in the intermarket relationships and just the overall market dynamics that we talked about that develop trust in what it is that we do here as smart money traders. All right. But yeah, if you guys could do me a favor, if you have any people that you think could benefit from hanging out with us, I invite you to invite them to come and hang out with us when we do things like this every Sunday for the rest of the year, unless obviously, God forbid, something happens to me. Let's just pray that doesn't happen, right? But yeah, if you guys have anyone that can benefit from this type of stuff, have them come and hang out with us. And again, if you guys got value, maybe in the comments you can leave the 1 or 2 things that you guys took away from today that was most impactful. If there was anything that you never heard before or felt was impactful for you moving forward. But yeah, with that being said, thanks again, you guys, as always. God bless you guys. I will be on my Instagram if there's any extra updates, or if I could fit it into a 60-minute thing, I'll probably just toss it into shorts. But yeah, if I don't think of anything else, I will catch y'all probably either Saturday next week. I'll probably check in a little bit during the midpoint of the week just to see how our analysis went. I'll probably post that on Instagram. But then obviously after that, we'll be right back here next Sunday to go over what took place and what's to come. All right. Well, God bless you guys. Thanks again for your support and hanging out with me today. Hope y'all got value, and I will see y'all on the next one.